consolidation phase over the course of the last few trading sessions. That indeed seems to be the case today also. We're off the low point of the day. Cuts of about 1/3% or so. And let's pull up the contributors to see what really is moving the benchmark today. And yesterday in trade, you had HDFC and ICICI that proved to be a bit of a drag. That seems to be the case exactly today as well. If anything, the contribution on the downside is higher than it was in trade yesterday. On the winning side, though, you have the likes of Larsen & Toubro, Maruti Suzuki, NTPC, etc. Let's also pull up the broader markets and see what they're doing right now. Yesterday, you had an underperformance of the broader markets. Today, you have more or less in line with benchmark move for the broader markets. But the small cap index at this point is outperforming, is just about flat and holding on to that territory for now. Pull up the market breadth because I'm curious. Yesterday, you had a tilt towards the declines towards the end of the session. Of course, it's even Stevens at this point, but it's been volatile. Yesterday as well, you had pretty volatile moves across the trading day where you had a recovery around the 2 o'clock mark for the benchmark Nifty 50, and then you had a decline in the last 1 hour of trade. We ended with a negative bias. That seems like it might just pan out today as well, where you're seeing a little bit of a steady recovery from the low point. I wonder whether we will move into positive territory at all towards the end of the session. Individual stocks, though. One stands out, Minda
Corp, absolutely, and up 8% on the back of the management guidance that came in after the analyst.
What guidance, right?
What guidance, right? 3.5 times growth is what they're expecting by 2030. Margins to expand to 12.5%. Debt to equity also will decline to that 0.3x, and ROC is expected to be at 25% versus 20% currently. So strong guidance coming in, and on the back of that, the stock is up 8%. Alcargo Logistics is the other counter that is seeing good up moves. IFB Dreamfolks is in the green today and locked in upper circuit. Although whether the sustainability of the business is still at question, but we'd have to see as to how things pan out for the company. But Anantraj continuous gains for a couple of days now, up 5% as well. Banco Products, Ask Automotive, AGI Green. Kesoram is also in the green today, seeing gains of about 4%. But something that's not doing well. Some counters in the red. In terms of BSE 500, there is something like a GMDC which is seeing profit booking today after the kind of rally that we've seen in the past 1 month. This stock has soared over 50%. eClerx is another one which is seeing some downtick in trade today, down by about 2%. Let's try to pull up the BSE 500 again and see as to what are the other counters that are in the red today. There you go. There is Adani Energy, Bharat Forge, Balkrishna Industries, Deddington and Emphasis. Some counters in the red. But with that, let's also welcome in our guest for the day, Vaishali Parekh, Vice President Technical Research at Prabhudas Lilladher, joining us now. Vaishali, hi, a very good morning to you. I'll take up the first question, which is on Godrej Agrovet. Nivendu Sharma is asking this question. He's got at the levels of 723 and 200 shares is what he has in his portfolio. Wants to know the medium-term prospects from a 6 months to 18 months perspective. Should he continue to hold the counter, and what is the stop loss if he continues to hold the counter? Your view?
Very good morning, Mahima and Alex. So if I'm looking at it, since it's a longer term horizon, the stock is really not doing anything right now. It's in a consolidation phase. But we have to wait for the stock to move past 750 levels. And if it does so, then I think it's ready for an upward trajectory of 850 to 900. So I think that will give you a follow-on higher levels. But also having said that, I would say this view gets negated if 680, 670 levels are breaking as support. So keep a stop loss of 670 and continue holding the stock.
All right. Dheeraj has got the next question. Dheeraj writing in from Hyderabad and holding 200 shares of Havells. He bought at levels of 1600. He's asking whether to add more at the current levels. Where is the stock trading? Below the buy price at 1,547. But he's got a time frame for the next 3 months. Is there a possibility that he will recover his buy price or maybe even make gains, Vaishali, on the charts?
So right now, currently it's at a make or break level. So today's low should be taken as a stop loss. Say 1520 would be the ideal stop loss level, and continue holding because I think it's very likely to give a bounce from here.
Okay, all right. We've got our next question from Rakesh, who is writing us from Hyderabad and asking about Zydus Wellness from a shorter term perspective. Vaishali, what are the support and resistance indicating for Zydus Wellness?
So, Zydus Wellness currently 465. I would say long-term trend is intact. There is just a regular retracement that we are looking at. So, keep a range of 440 to 490 for now. Either ways, we get a clarity as to which way it's going to follow on.
Okay. All right. Let's take the next question. And we've got Rakesh who's writing in from Hyderabad. And Zydus Wellness is just done. Let's take the next one. In fact, you mentioned this, Anantraj. It's been up and about in the recent past. And this is a question from Hyderabad. Govind is writing in and asking about this. He's asking if we can invest for the long term at these levels. And he's looking for the technical view on this particular counter. It's up 16.5% in just a week. Vaishali, is this a good level to invest in for the long term, or will you get a better opportunity in the near to medium term?
As a disclaimer, actually, we have recommended this stock to our clients, but it's already shown a good run up. I mean, we have seen from the recent movement from 580 to now 700 levels. So even if it's for a long term, I would say start accumulating, keep 600 now as a major support, because when I'm looking at the long term charts, it is ready for a good higher levels of 950 or so. So I would say keep a stop loss of 600 and accumulate the stock.
Right, so that's with regards to where Anantraj stands. We've got our next question, which is from Aparna, who's holding around 571 shares of Praj Industries. The average purchase price is 554 and wants to know as to what are the charts indicating going forward from a longer term perspective. Your view with regards to this, Vaishali, today sugar stocks or ethanol stocks have been in focus because government has kept ethanol procurement prices from sugar-based feedstocks unchanged in the current financial year 2026. Your view with regards to this?
So even the weekly chart, monthly chart, it's not really showing. It's on a downward. Only consolation is that it's in the deep oversold. So I would say one can take it as a trading strategy. Keep 360 as stop loss. This would make a favorable risk reward. 360 as stop loss and look for a trading target of 420 to 440. That's the way to look at the stock for now.
All right. We've got Samir Dalal of Natwarlal and Sons Stockbrokers joining in. Samir, thanks so much for joining us on short notice. We appreciate it. Let me ask you the first question, actually, and this is on electro steel castings. And this is a stock that has been in the news in the recent past as well. We've got a viewer who's writing in and who has bought at levels of 194, wondering if it's a good time to move out of the stock because they've lost a little bit of, actually quite a bit of ground. They halved their value because they've bought at levels of 194, or should you hold on? What's the view?
So Alex, always pleasure to be on your channel and be with you all. Having said that, unfortunately, Electro Steel is one of the companies we don't cover, so I can't have a view.
Let me go across to Vaishali. Vaishali, if you've made significant losses, apologies, on electro steel castings, would you hold, would you average at these levels, or would you exit and book the loss?
I'll just have a look.
Yeah.
I think currently, I think the worst is over. Even if I'm looking at the indicators, it's getting into a momentum. So I would say hold on. Keep 95 as your stop loss now that you've held on for so long. 95 as a stop loss. And I think if the stock gets into momentum, I think near-term targets can be seen at 120 to 140 levels. So not in a hurry. I would not say don't exit in a hurry.
Okay, all right. So that's with regards to where electro steel cast stands. We've got our next question from Ikambarai, who's writing us from Hyderabad and asking about JSW Energy. Wants to know if he can enter right now and continue to hold from a longer term perspective. Samir, your view with regards to where JSW Energy stands?
Yeah, so it's a good counter. You look, they're expanding quite well. The targets that they've given for 2030 are that they want to reach a 30 gigawatt power capacity, 40 gigawatts of storage capacity. So all of these things over a period of time as the expansion takes place will obviously drive growth and profitability as well, because a lot of these usually work on PPAs. Only thing is there's some recent news that's come that certain PPAs are not getting signed. So if they are able to get that done, I don't think there's a problem. I think, yes, valuations are a little bit on the expensive side, but then we believe that the power sector is going to see a great growth in India over the next few years. And the renewable space, especially where JSW does have a focus on, will do well. They've recently made an acquisition in the renewable energy solar space. That also is getting scaled up nicely after the acquisition. The capacity, then the acquired company is also being scaled up. So we think there is an opportunity to make some returns in JSW Energy, and one can continue to hold if they are holding. And if you are looking to buy, I say wait a little bit, wait closer towards the 500 odd levels. I think that is or 480 levels. I think that is a better price to buy than currently.
All right, we've got Nikhil Tirumala Setti, who's writing in from Hyderabad, and he's asking about futures. And I informed him, Vaishali, that we generally don't take questions on derivatives, but what we can do, he wants to go long on the benchmark for the September expiry, and he's looking at a level of 25,153. So why don't we talk about what your expectation for the benchmark is in the cash market, and whether or not you see the current seeming mode of consolidation breaking and the move heading towards the upside towards the end of the expiry, which is next Tuesday.
So I would say, well, for now, it seems to be just a regular retracement, because in the recent past, we've seen already a 1,000-point rally coming in. So as long as 25,000 level support are held on, one can expect a bounce up to 25,300, 25,350. But if 25,000 levels break and decisively the market goes below that, then I think we are in for trouble. It can perhaps go to 24,800 or so. So that is the way he can. So for now, the risk is quite okay to take. A break of 25,000 will negate the view, but for now it looks pretty possible that we can see a bounce coming in.
So that's with regards to where Nifty futures are concerned. The next one is on SBI cards. This is from Vijay, who's asking about SBI cards and whether this is the right time to make an entry in this particular counter. Your view on this, Vaishali?
I'll just have a look.
Yeah. If you can try to pull up the charts till then, 1 month chart for SBI cards, and see what it's done in the past 1 month. There you go. It's
Yes,
up 7%. Yes, go ahead.
So it's made a double bottom at 800 levels. Now it's getting into a trend, and for now it's a higher bottom formation. So keep a stop loss of 850, and near-term resistance comes at around 900 levels. So 850 to 900 would be the range, and above 900 it gets into a good upward trend. So for now it's just a trading strategy.
Okay, all right. So that's the view with regards to where SBI card stands. We've got a next question from Samir. This is from Arjun, who wants to ask Samir this question, and he's asking about Kitex Garments and wants to know if this is a good buy from a longer term perspective. Samir, any view on this one?
Unfortunately, no, not on Kitex Garments, but we do think that, some of these exporting houses and garments will eventually bounce back. For the simple reason that there will be a deal signed, and right now what's going to happen is a lot of these companies are going to work on lower margins. So, we spoke to 2 companies, they are unfortunately unlisted, but what they talked about is the fact that we've had to take, of the 20-50% increase in cost that's happened, we've been forced to absorb some of it, while some of it is being absorbed by the buyer. They're waiting and they're continuing to do the operations because they want to keep the operations ongoing. But it is very imperative for the trade deal with the US to get signed, because a huge amount of these companies' exports were there. So I'm not sure about Kitex Garments, how it works, but if these stocks have corrected on the back of the import duty from the US, I think that over the next 3-4 months will get taken care of. And these are decent times to probably add on to some of these stocks. I don't have a view on Kitex, but Gokuldas is something that we cover. And yes, valuations seem optically expensive, but I think once the turnaround happens in this, you'll get an uptick and get a bump up in all of these counters. So for a trading perspective, I would say, yes, you can probably go out and make an investment in these stocks.
All right, so that's with regards to where Kitex Garment stands. We've got our next caller. Saraswati is calling us from Bengaluru. Saraswati, hi, a very good morning to you. How can we help you today?
Hi, good morning. So I just want to know more details about Adani Power shares, which I hold. I have 4,320 shares at the average price of 142.94.
Okay.
So how long should I hold to see a nice profits on this? It's recently undergone to the split.
Got it.
So,
Got it, Saraswati.
what-
And when you bought this, you saw the fundamentals, I believe, of the company.
yes.
Okay, all right. Then I'll take this up with Samir. Samir, your view on Adani Power? She's already sitting on profits of 50,000 rupees. Should she continue to hold?
Well, like we told you earlier when we spoke about JSW Energy, we continue to remain positive on this power space. And Adani Power is following the similar kind of trend. They're setting up a lot of renewable capacity. They're expanding quite well. Again, they have large targets. We don't have, again, active coverage, but I think the entire power space will do well. Adani Power will also be one of the beneficiaries of the entire expansion in the power sector with the expansion. Where I have a little bit of issue, I'm not saying issue, but a little bit of concern with Adani Power is the fact that their debt levels are a little bit higher. And the expansion is going to ensure more debt. So unless they can raise some capital, I think they should not have any issue doing that. But once they do that, I think then Adani Power will become a decent company to look at from a longer term perspective. Yes.
All right, let's take the next question. And we've got several coming through on WhatsApp. By the way, I must point out that we intend to take a second rapid fire. Regular viewers of this show will be aware that we do one rapid fire at the end of the show at 11:30 or thereabouts, 11:20 or thereabouts. We will do another at the end of this half hour. By the way, we just discussed Adani Power, which is part of the Adani Group, and NDTV Profit is part of the Adani Group as well through NDTV Group. That is the standard disclaimer. The next question we're taking is on, have we discussed BHEL?
No.
Okay, so let's talk about BHEL. And we've got Praveen, who's bought at levels of 290. He's incurring a loss at this point, and he's wondering whether to book those losses or to hold on. He's got a perspective, I believe, for 1 year. Oh, he's been holding for 1 year. He's not told us what his timeline is. Vaishali, on the charts, I'll come to you. 236 is the current market price. 290 is where he's bought it at. Should he hold on?
I think you should hold on because it is getting into a trend. Keep a stop loss of 220 and wait for the stock to go above 250. Then I think you will get good returns from there on.
All right, new listing. Manu, so VMS TMT is the name of the counter we're talking about. It listed a premium. It's cooled off just a tad bit from that point. It got oversubscribed, the IPO, quite considerably. In fact, 102.27 times. Investors placed bids worth 12,452 crore rupees or thereabouts. And this is an interesting play to talk about. Let's, in fact, speak about this with the management. They're manufacturers of thermomechanically treated bars. Manoj Jain joining in. Manoj, thanks so much for taking the time, and congratulations on a successful listing. Let me ask you this. The intention of the IPO was to reduce debt and for general corporate purposes. So what is the trajectory of debt reduction? When do you see that happening? And what are the levels that you would anticipate we would see debt at the end of the current financial year?
थैंक यू सर। इससे पहले तो मेरा थैंक्स इन्वेस्टर्स हैं जिन्होंने इतना बड़ा इन्वेस्टमेंट किया और ट्रस्ट दिखाया कंपनी और प्रमोटर्स में। थैंक्स टू दैट। और आज लिस्टिंग भी हो गई कंपनी की, विजिट्स पे लिस्टिंग हुई है। और जैसा आपने बताया कि ये जो आईपीओ है इसका मेजर का पोर्शन है वो लॉन्ग टर्म डेट रिडक्शन में जा रहा है, जिससे कि कंपनी का जो पैट है, बॉटम लाइन है, उसमें तकरीबन साल का 10 से 12 करोड़ रुपए का सुधार आएगा। प्लस कंपनी ने जो सोलर प्लांट का जो रिन्यूएबल एनर्जी की स्टार्ट की कंपनी, वो मार्च 26 में ऑपरेशनल हो जाएगा। इससे भी काफी बड़ा हमको जो है नेट के अंदर देखने को मिलेगा। प्लस जो बैकवर्ड इंटीग्रेशन जो है कंपनी में जो ऑपरेशनल हो चुका ऑलरेडी, उसका भी इम्पैक्ट आ रहा है। जो टॉप लाइन है और बॉटम लाइन है, better for the coming years.
Mr. Jain, hi, Mahima also joining in. Just want to understand, FY23 revenue was at 882 crores versus 771 crores in FY25. Why is that dip, firstly? And from here on, do you think this revenue going ahead will improve and will cross where you were at FY23? What is the growth outlook like?
Yeah, thank you, ma'am. When last year, in September 24, we have completed our backward integration. In backward integration is the direct now from scrap to TMT, we are going to manufacture it. Earlier, we were buying the pellets and reheat them and making the TMT. Now, after this expansion, backward integration, we have to synchronize both the plants forward and backward. So, 3 months, that is in the last year, 24-25, 3 months, plant has been operated at single shift. Otherwise, it's operating three shift. So the production is less, so the sale is less. That's why the top line is less. little bit, in fact, there's some price lag also at 24-25. How it has been improved. अब अभी जो आप करंट ईयर में देख रहे हैं, जो जून के डेटा है क्वार्टर जोस के, उसके अंदर अगर देखेंगे तो टॉप लाइन एंड बॉटम लाइन हैज बीन ऑलरेडी इंक्रीज एंड दैट इज दे आर ऑलरेडी utilization is more than 80% of the capacity. It will achieve 90% at the end of this year. So the top line is also going to and improve.
Okay. Mr. Jain, unfortunately, there's a bit of an issue with the audio of the conversation that we've had. We managed to catch 4 out of 5 words, but I think we've gotten a sense of what you were trying to say. Once again, congratulations. Thanks so much for joining us and look forward to the next chat. All right, let's... I promised you that we would take a second rapid fire on the show, and we're going back to our guest Sameer as well as Vaishali on this one. Heads up to the both of you. This is the first question, and it is on Hindustan Aeronautics, and it's coming in from Siva, who's writing in from Amravati. He's looking for a view for the next 6 months. Vaishali, he's bought at levels of 5,050. Does he hold on?
I think yes. 4,300 support, 5,500 target.
Okay, Jeet is asking the next one on Birla Soft. He's holding 61 shares, bought at 608 a piece, making a loss right now. Should he purchase more at the current levels for the next 3 to 4 years? Sameer, your view?
I think they're better companies. I think it's avoidable.
Avoidable. Ask Automotive is the name of the counter. 535 is a buy price. Naveen from Bengaluru wants to know whether to hold or exit. He hasn't given us a time frame. Vaishali, what's the view?
Hold. Look for a target of at least 610.
Okay, Motilal Oswal is the next one. Krishnamurthy from Mumbai is holding 40 shares at the levels of 565. Wants to know if we can book profits right now or hold. Your view, Vaishali?
Hold.
Datamatics is the name of the counter. 915 is the buy price. 150 shares bought. Would you hold or sell at this point? Vaishali?
Hold.
Okay, Raghu is asking the next one on IT sector stocks. Should he sell or average out? He's not named any specific counter. But Sameer, your view with regards to IT stocks, and what would your pick be?
So honestly, I'm not very positive on IT, so I would not recommend adding on more. I think if you had to take a pick, probably at this point, Infosys makes the most logical sense given the buyback.
Okay. Markson's Pharma is the name of the counter. 200 is a buy price. Kanan wants to know whether to accumulate at this price or wait. At what price would you accumulate? Vaishali?
To oversold, accumulate with 160 as support and wait for higher targets.
Okay. G Power is the next one. Narendra from Bangalore is asking this question. He's holding 635 shares, bought at 395 a piece. Wants to know if he can add more or sell at the current levels. Your view, Vaishali?
Wait for further more dip, 320.
Okay, Vishal Megamart IPO allotment Aarti has gotten. She's got 190 shares, planning to hold for the next 3 to 5 years. Should she hold for that period, add more? Sameer, what's the view?
I think in corrections you can add more. I think the consumer space is going to do really well over the long term, and Vishal Megamart caters to that space.
Okay, so we will be back on the other side of this break to take more of your questions. We'll delve a little deeper. This was an attempt to answer more of your questions. Do stay with us, and we'll be back on the other side. Hopefully you can call us and speak to us. We look forward to that. Do stay tuned.
आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया।
प्रणाम दादाजी।
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं, घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं, ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
और ये कौन सी कंपनी के मालिक हैं?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa, Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Welcome back. You're watching Ask Profit, and this is a show that gets you answers to all of your stock-related questions. But we can't get away from the news, and there is a significant update in the PSU banking pack. This is a pack of stocks that has done incredibly well in September so far. The index as a whole is up close to 10%. It is one of the top gainers in trade today, as it was the case yesterday as well. And Somit Sarkar joining in with perhaps the reason why these stocks are in focus and might be buzzing. Somit, something to do with the FDI limit?
Well, yes, PSU banks have been in focus in trade today, and they have been gaining on the back of the news report, which suggests that government might look to increase the FPI limit on PSU banks, and the current limit is at around 20%. So even if we assume that this limit increases from 20% to 49%, given the fact that the report also suggests that government might look to retain the majority shareholding at around 51%. So this increase in FPI limit itself could lead to massive passive FPI flows that could come in. The amount could be very significant in terms of the flows that some of the large banks who are already part of the MSCI and FTSE index could see, and this is largely because the increase in the FPI limit will increase the weightage of this PSU banks in the MSCI and the FTSE index, because of which there could be additional inflows. So as per earlier reports that we had collated from multiple analysts, we understand that the highest amount of FI inflow or passive FI inflow could come in SBI, followed by Bank of Baroda, Canara Bank, PNB and Indian Bank. Now for SBI Bank, if you look at the FI inflow because of the fact that SBI is part of both MSCI and FTSE index, the combined FI inflow that could come into SBI Bank if the limit has been increased around 49% from current 20% could be close to $1,455 million. Bank of Baroda could see an inflow of close to $206 million. Canara Bank could see an inflow of close to $165 million. Punjab National Bank could see an inflow of close to $58 million, and Indian Bank, which is part of the FTSE index, could see an inflow of close to $15 million. So SBI stands out to be the biggest beneficiary here because of this increase in FPI limit. But do remember that as of now, these are only reports and nothing has been confirmed from the government side on the same.
And this relates, thanks so much, Somit. So what you need to understand, we're talking about foreign portfolio investors, and we're essentially, this is the flows that we track on an ongoing basis. We say every day in the morning, we tell you, okay, overnight or in the previous session, you had a net inflow, net outflow. This effectively is talking about how much foreign portfolio investors are allowed to invest. Samir, implications of this, if this limit is indeed raised and you could have more buying, of course, the argument can be made that compared to private sector banks, public sector banks at 1.3, 1.4 times price to book forward are attractive at this point. Wouldn't they be?
Yes, I think they are comparatively on valuation basis attractive. But the reason that the valuation differential is there is the ROEs that the companies generate, right? Mm-hmm. It's also the ability to manage their losses and NPAs. So the private sector banking, some of the larger names trading at higher valuations have been able to prove that they can do it more consistently than the PSU pack, which has struggled in the past. Hopefully, they will not struggle in the future. So if that is the case, then yes, a re-rating can come into place. And, if the valuation gap narrows, there is a re-rating upside potential for some of these PSUs. Now, having said that, I don't know. I mean, I haven't really checked it, but we need to see which of these PSU banks have reached the FPI limit. I don't think too many of them have. So even if we assume that the FPI limits get increased, it is based on what assumptions that I'm not sure, but that FTSE or any of these will do the re-rating or increase the holding levels in some of these PSUs. So at the moment, like your person said, it's all speculation and assumptions. Once the news flow comes through from the government first and then from the FTSE, so it's probably still a while away. Would I be trading just on this back of this news? Probably not. But fundamentally, I do believe that PSUs have upside from growth perspective also. The top pick in that space for us is at the moment CanBank, and second followed closely by BOB. Earlier it was BOB more than CanBank, but CanBank has shown certain things that make us believe that their profitability will increase more. So we've probably shifted our focus more towards CanBank being our top pick at this point.
Okay, all right, Samir. Thank you so much for that view, and of course, taking out the time and speaking with us at such a short notice. So thank you so much for that.
Thank you, Mahima. Thank you, Alex.
All right. Now on this side of the show, we are joined by Rajesh Agrawal, who's the head of research at AUM Capital, joining us now, and we've got our next caller as well. Ashwin is calling us from Bengaluru. Ashwin, hi, a very good morning to you. How can we help you today?
Hi, Mahima. Good morning, and happy Navratri to you.
Happy Navratri to you as well and to your family.
Thank you so much. I have actually a question on to where do I invest my amount? I have about 2 lakhs to invest, and I've done a little bit of research, and I have shortlisted a couple of banking names, that is Canara Bank and Bank of Baroda. I was just hearing Mr. Samir speak about Canara Bank.
Correct.
So I would like to know whether Canara Bank, Bank of Baroda and Trent, out of these three, which one would be the better pick where I could invest my money?
Okay, Ashwin, I got your question. May I know what percentage of your total portfolio will this be?
This will be about 10%.
Okay, all right, got your question. I'll take this up with Rajesh. Then Rajesh, your view with regards to this particular query. 2 lakhs is what he wants to invest in, and what counter should he go ahead and invest from the 3 he mentioned?
Good morning, everybody. First of all, my apologies for being late.
No
City is
worries.
underwater. So, as far as
It's important that you're safe. Rajesh, it's important that you're safe. Thanks so much for joining us.
Alex, the entire city is underwater. It's the worst rainfall after 1978. So
You know, maybe you can take a video for us and you can send us the details, because we'd love to tell our viewers about it. And of course, everybody who's tuning in from Kolkata, I hope that you're staying safe and ensure that you don't venture out if you don't have to. Of course, you can always tune in from where you are and watch the show in case you can't head out. Rajesh, what were you making? What were you saying?
Thank you, Alex. As far as long-term investment is concerned, the gentleman has rightly selected some of the banking names like Bank of Baroda or Canara Bank. Both are very good. I have no doubt on that. What he can do is put 50% in Canara Bank and 50% in Bank of Baroda. That's out of 2 lakhs, 1 lakh in banking. That's 50% in Canara Bank, 50% in Bank of Baroda. And the rest 1 lakh, I would suggest go for put 50% in Trent and the rest 50% in Reliance. And give a time horizon of at least 18 to 24 months to have some decent returns in that. And I'm sure some very good returns would come out of these 4 stocks.
Okay, all right. So that's with regards to where Rajesh's picks are concerned. We've got our next caller. Sudhin is calling us from Jharkhand. Sudhin, hi, a very good morning to you. How can we help you today?
Good morning, same to you. Thank you.
Go ahead with your query, Sudhin. We can hear you.
Actually, I got Tata Investment share, 10 shares at the rate of 8,377. Should I hold or continue, or should I exit from this rate?
Okay, got your question. So then I'll take this up with Vaishali, because Vaishali, we've seen a significant run up in the counter yesterday. Do you think the momentum is here to stay, or should you book profits?
I would say continue holding. Of course, keep a trailing stop loss because it's run up one way. So in between whipsaws cannot be ruled out. But when I'm looking at the larger period time frame, I think I'm looking at this stock going towards 10,000 bucks. So in my opinion, if time is not the worry, then please hold. Look for higher targets.
To go up to 10,000 only because there's a stock split that has been announced, but the stock could well be heading higher. Vaishali, the point is well made. 1:10 was approved by the board, so the stock is going to be split. I think there's some interest on account of that. Rajesh, you want to come in on that? Of course, this is just corporate action. Usually there is buying interest by investors ahead of something like this, because effectively you get more number of shares. I don't know if it changes anything materially though. What's your opinion?
See, I totally concur to your view that it doesn't change materially anything, whether it be bonus or it's split. It's just a splitting of the value. But the thing is, retail interest starts coming up. Yesterday, we have seen Adani Power. It was on a 20% circuit just because of after the split and all. So that's what happened in 9,000 odd rupees. Retail just shies away, and when it becomes 890, 900 odd rupees, retail will come in a big way. And the next is Tata Capital IPO, which has been announced, and that is going to have some some material effect on the stock prices of the Tata Group companies. So for that reasons, these stocks are going to be in limelight. So I think maybe around 10% upside from these levels is quite possible, whether it's come split or post split. So that's the call. One should continue to hold.
Hold is a view on Tata Investment. I'm coming back to you on the cement pack, and it's an interesting one to track because Q1 was better than expected. All signs are pointing to a resilient Q2 as well, despite the early onset of the monsoon. Specific question on Ultratech Cement. Yashoda from Bengaluru is asking if this is the right level to buy. Rajesh, what's the view?
See, as far as levels are concerned, that I think Vaishali would be a better person to say. But I think the company is fundamentally very strong with the largest capacity, doing very well. And with the kind of demand upsurge we are seeing in the entire cement pack, it's one of the best play in the cement pack. Secondly, if you are looking for a long-term horizon, by long-term I mean anywhere between more than 12 to 18 months, then you shouldn't be much concerned about levels, because at 12,000 odd levels, 200, 300 rupees here and there hardly matters. Thirdly, if you are wary of buying a share at 12,000 odd rupees, you can go for Grasim, which again is a holding company of Ultratech. So you get the indirect hold of Ultratech plus the other businesses of Grasim. So that's the two choice one can have.
All right, we've got our next question from Lata, who's writing in and asking about VM Industries. She wants to purchase 1,000 shares of VM Industries and wants to know if this is the right time to make an entry from the next 6 months perspective. Vaishali, do you think that's the correct reading?
I would say so. Actually, since it's for 6 months, I would say keep on accumulating, because the long-term trend is very intact. Right now also it is at a good level to start buying. But I would say when it's for a longer-term period, keep accumulating, keep 1900 as support and look for targets like 2300, 2400. That would be the target for now.
All right, Vikrant Engineering is the name of the counter we're talking about next, and a short-term view is being sought by Shashank, who's writing in from Hyderabad. He has already bought at 110 rupees. Yeah. So 110 rupees is the buy price. 4,000 shares have been bought. So significant quantity, losing ground. But his stock is not too far away from the current market price, or rather from his buy price. Should he continue to hold, Vaishali?
Keep a stop loss of 103 and continue to hold, because of course I have limited data, but currently it's at a support of a moving average.
All right, so that's the view that we have here. Okay, we've got our next question on Mukka Protein, and this is from Arni Agnihotri, who's writing us from Pune and is a short-term investor. He's got 10,000 odd shares bought at the levels of 30 rupees. The stock is currently trading at 27. But do you think in the near future, Vaishali, he can get into the greener territory and make some profits?
Well, there is no positive trigger right now, but just one thing that it has corrected substantially. So 26 acts as a support. The trajectory is down. The conviction comes only about 30 rupees. So wait and watch scenario.
Okay, all right. We've got our next caller. Sijo is calling us. Sijo, hi, a very good morning to you. How can we help you today?
Good morning, madam. I have a query regarding Sonacom. I was holding 320 stocks.
Okay.
Average of 540. So I want to know, it will be hold for long time and I can add more stock in this stock. What is the view?
Okay, all right. Got your question, Sijo. I'll take this up with Rajesh. Rajesh, your view with regards to where Sonacom Star is concerned?
It's a very strong company, a strong order book, and the best part is around 70-80% of the order book is from the EV side. That's flourishing. The only problem is the unfortunate event that took place some times back, and for that reason the stock is under pressure. But I think once these corporate problems are solved out, it's going to go up to around maybe 470, 480 odd levels in the near future. So at this point of time, not only it's hold, one can even buy. Somebody looking for buying this stock for a medium to long term horizon can even buy.
Okay. All right. I hope that answers your question, Sijo. The next question is on SpiceJet, and Kader is asking this question. He's writing in from Bijapur, and he's bought at levels of 43 rupees per share. 8,000 shares have been bought, and he's looking for a 3-month time frame. I'm not going to ask a question on the fundamentals. Really, it is a short-term question, and I think it's a trading idea. What's the view, Vaishali, on the charts?
Avoid.
Avoid. So exit at this point?
Yes.
Book the losses? Okay.
Yes.
And so then, okay, if that is the case, then let me then ask a fundamental question. Since on the technicals it is, and I know Rajesh's face, and by this point I can read his expressions, I'm guessing that he is not going to suggest a hold on the fundamentals either. Would you suggest, on the other hand, to switch to the market leader, which is Interglobe Aviation at these levels? The prospects for Indian aviation and for the market leader, which has over 60% market share in the domestic market, seems to be quite significant.
See, Alex, the problems of SpiceJet is never ending, I think. Every now and then you have some bad news coming in and the stock starts moving down. It's still trading at around 52-week levels, 52-week low levels, if I'm not wrong. So it's better to avoid these kind of stock. Fundamentally, there are nothing left. Sometimes there are news of salary being had, sometimes other things. So why not go for the market leader? That's Interglobe, as you said. Yes, it's a pricey stock, but then it's a market leader doing very well. The numbers in the last 2-3 quarters have been very good. And with crude around $70 odd from such long period of time, I think these companies are going to do well. So switch from SpiceJet to Interglobe.
And look at that chart. In fact, if we try to pull up the comparison between the two, SpiceJet has been down 48% almost year to date, and Interglobe Aviation has seen an uptick of around 25% year to date, and that explains.
Stark,
yes,
right?
It's very stark, and that explains the fundamentals and the technical view as well, right? So thank you for that, both of you, Rajesh and Vaishali. We've got our next question then from Chaitanya, who's writing us from Andhra Pradesh Visakhapatnam, and asking about CDSL. He wants to know if he can make an entry at the current levels for the next 2 years. Rajesh, your view with regards to this counter?
Of course, it's a good buy, no doubt on that. The EMI stocks are doing well, have been doing well in the recent past. It's only recently that they have come under certain pressure because of all the news. But I think the way equity culture is expanding in our country, be it direct equity or be it SIP, these companies, be it NSDL, CDSL or BSE, are going to do well. So it's a buy from our side for somebody thinking of 2 years horizon.
All right, news on the bottom of your screen, and something to bear in mind. This is a letter that has been sent out to shareholders of the Adani Group, specifically to Adani Green, I believe. I'm going to try and pull up the details as we're speaking about it, but some of the data that comes through, or some of the information that comes through, this is a message by the chairperson, Gautam Adani. What was meant to weaken us has instead strengthened the group, and this is in response, of course, to the Hindenburg report from 2023. January 2023 was when it came through, and as you probably are aware at this point, the clean chit came from the regulator after a very detailed investigation. Of course, that in itself followed a Supreme Court verdict in the issue. A specific investigating team had been put together to look at the allegations that had been made by the short seller Hindenburg, and everything that has happened after that culminates in the clean chit that was given to the group last week. In fact, some of the other statements that are being made, the gross block has expanded by nearly 2 lakh crore, a 48% increase. And he's specifically speaking about this company. It delivered transformative projects that have reshaped India's infrastructure landscape. And ultimately, that is what the group is involved in. You're talking about right now the letter to shareholders of Adani Green. And so therefore, the chairperson is talking about the Khavda project, where the plan is to take solar capacity all the way up to 30 gigawatts, which is a very massive amount of solar electricity generation capacity. The report, he says, was not merely a critique of the Adani Group, but also an attack on the capital markets here in India. And this is something that has required Adani Group to buckle down, reduce the amount of debt that is had on its books and strengthen its financials. He says last week SEBI delivered a resounding and unequivocal response on that Hindenburg issue. With a clear and final word from SEBI, the truth has prevailed in this entire saga that has gone on for 2.5 years. What was meant to weaken the group has instead strengthened the group in terms of the financial performance as well. This is something that I was alluding to. Over the course of the last couple of years, the amount of debt on the books has been reduced on the balance sheets of various group companies. And remember, these are infrastructure companies. They require debt to function. At the same time, you've actually had significant cash generation. And there you go. The portfolio EBITDA has actually risen from 57,000 crore odd in FY23 to as much as 89,000 crore rupees in just a couple of financial years. This is a very significant statement, right? So some of these data points, of course, you will be aware of because you probably followed these companies, but it's important to sometimes stop and take stock of what has been achieved in a very small time frame. The absolute growth in portfolio EBITDA standing at 57% in the span of just 2 years. And of course, quite a few of these stocks reacted quite sharply after that development from the Security and Exchange Board of India, where you had, for example, an Adani Green that was up about 12, 13, 15%. You had Adani Total Gas, which a lot of analysts have pointed out was trading at a steep discount to what the valuation should have suggested, and it has recovered quite substantially from those levels. At one point it was up 20%, I believe it was at the upper circuit. Adani Green also one of the counters that did particularly well. And of course, don't forget Adani Enterprises, where it's been viewed as the incubator of the group. Adani Airports Holdings is one of the entities that falls under the ambit of Adani Enterprises, and you probably know just another 5 days away, the opening of the Navi Mumbai International Airport. Apart from that, you have 8 airports that the group controls, and that it also includes, of course, the current international airport, MIAL, in Mumbai. What is interesting to note is the plans on that front as well, where you're going to have city-side development that takes place. Of course, the conversation at this point is about Adani Green and the statements that the Adani Group chairman has made. I'm going to read through some of these things. Indian markets awoke to headlines that reverberated beyond Dalal Street on the 24th of January. That is the reference to the Hindenburg attack that took place. The report was not merely a critique of the Adani Group, it was also a direct challenge to the audacity of Indian companies to dream on the global stage. Because, as you know, at that point, the group was looking overseas to expand in significant geographies. The report marked the beginning of a test that pushed every dimension of the group's resilience. This is all from the statement that Mr. Gautam Adani has sent to shareholders of Adani Green. Last week, the Securities and Exchange Board of India delivered a resounding and unequivocal verdict dismissing allegations against the group. With SEBI's clear and final word, truth has prevailed. What was meant to weaken the group has instead strengthened the very core of the foundations. This moment is more than regulatory clearance, it is a powerful validation of transparency. It is the truest evidence of the resilience in the group, and he says that the resilience lies not in words but in performance over this period. And he's specifically speaking about the portfolio EBITDA. That's something that I referred to. It's moved from 57,200 crore rupees in FY23 in just 2 years to 89,800 crore rupees. That absolute EBITDA growth standing at 57%. The 2-year compounded annual growth rate at 25%. The gross block, as I mentioned earlier, has expanded from 4.12 lakh crore rupees in FY23 to 6.1 lakh crore rupees in FY25. Rajesh, if you're still with us, I have a question for you about this. And of course, we saw the reaction in the stock prices just last week. What do you make of the statement? This is, of course, highlighting the tremendous growth in the EBITDA that the group has managed, along with or alongside the deleveraging strategy that it has employed. And quite a bit of the expansion plans now are expected to be fueled by the cash generation that the companies have achieved.
I totally concur with your views, Alex. The statement by Mr. Adani is very comforting, not only to the entire market as such, but also to the small shareholders who do not have access to much of a data or much of a story. They just go on running through the, all the negative news and all. So it's better for them. And as far as the debt levels are concerned, which has been mentioned, I think with the kind of infrastructure growth this company has been witnessing, be it ports, be it renewable energy, be it gas, be it power. So these kind of infrastructure do have to take some amount of debt, otherwise this is not possible. So only measuring some company on the huge debt, I don't think that's the right way to do. This would be a very comforting statement. And yes, the company the group has been growing very well. And out of the entire pack, we have some of our picks like Adani Enterprise, Adani Power, and Adani Green at this point of time, which we would recommend our investors to buy for a medium to long-term horizon.
Okay. I'm bringing Hiral into this conversation as well, and Neeraj will join us in just a bit. In fact, he has. Guys, so this is ultimately a statement to the shareholders that have, along with the group, stood the test of time, right? Because particularly for those investors that got in, rode that rally up to the 2023 January period, and it was a tremendous rally. And if they held faith or doubled down at that point, this is a statement to those investors.
Yeah, but well, Alex, you could argue that it is, but I'm sure nobody would fault the investors' behavior. It was a very difficult time,
yeah.
And therefore investors took the action at that point of time, which they believe was in the best interest of their portfolios. Certainly. Right? Simple, as we've discussed in the past as well. But I think in some sense this is to my mind, this is now serving as the ideal template for what will happen to large Indian dreams wanting to go on a global scale and possibly facing actions. The template is set. The characters will differ. The attacks will come from multiple other quarters. But now people will know that it's better to analyze things in proper detail as opposed to go on rumor of some entity somewhere in some nook and corner of the world and doubt established Indian corporates with a history of multiple decades. I think that is the template that is getting set.
Exactly. And to add to this, I think this entire saga has become bigger than just the Adani Group, and that's what I think Neeraj is alluding to right now, because earlier you're talking about what has happened with Adani, but let's take precedence from this, and that's what investors are saying, that the confidence is restored right now. The findings have now come and said that, listen, let's not only believe what any of these short sellers are coming and saying, because it's wealth erosion for your Indian retail investors also. They are making a huge buck on the back of these reports and going out.
Yeah.
So I think this clean chit that has been given by the SEBI is more of restoration in terms of investor confidence. Two, it's actually setting a template, as Neeraj is mentioning as well, in terms of what can be done in future and the way investors should look at conglomerates who are operating in the country as well for decades right now. And, a Hindenburg or a Jane Street, for that example, they are the ones who've actually profited at India's expense. I mean, there has been panic, there has been shorting of stocks that has happened, and they've walked away with billions. So this is a clear message coming in here.
Yeah, certainly. And but the point that you made, both of you all have made important points, but I think this was alluded to in a statement that was made by Mr. Gautam Adani, is that this may not be the end. In fact, we're bracing for future attacks as well, but then it is provided a blueprint for us to react in the future. We've prepared, we've improved our financials, and indeed they have. The amount of deleveraging that has taken place over the course of the last 2 years and the growth, 57% growth in EBITDA for the group, is nothing to scoff at. And the interesting thing here is that the assets are visible for all to see, purely because of the nature of the business. Ultimately, you cannot ignore a port. It is there, right?
Yeah.
Or you cannot ignore a huge solar a farm, not farm, but like an expanse in Khavda. Yeah. You cannot ignore that and the pace of increase, right?
You can't. I mean, think of it this way, right, Alex? You made a very pertinent point, but I'll add just a little bit more pertinence to it in that 57% growth in EBITDA has taken the number from a staggering 57,000 crores to a mammoth 88,000 crores.
Yeah.
This is not 100 crores EBITDA growing 57%, right?
Yes.
So just adding that. You are so right. But yeah, just that they've done that, the deleveraging. And so many people in private conversations say that maybe this was actually a boon for the Adani Group, because they went out, they delevered, they made all the right moves that a corporate could make in those times. And maybe it's actually turned out to be a blessing in disguise from a 20-year perspective.
And actually, okay, 20-year perspective certainly, but the plans heading into 2032. So the latest word from the group is, of course, the statement is $100 billion of investment. And it's a little, when you say $100 billion, you say it in a sentence, but it's a little hard to fathom, right?
It is.
You're talking about 50% of that is a little over 50% of that is going to go into the power businesses, into your energy solutions, and into enterprises and what it's doing on city side development.
Into airports, into commercial mining, including into real estate.
Yes.
Yeah. Right? This is huge what's happening in real estate as well for the group. And just, sorry to qualify, I mean, what I only meant to say was, I should have said 21 and a half years, because I think the group is thinking from Viksit Bharat perspective and what the group will be then.
2047 from here is the key question from here on. And to add to Adani Enterprises as well, the businesses, in fact, just a couple of days ago, we were talking about it, I think, from Adani Airports Holding that Neeraj mentioned, your Adani New Industries. They've commissioned their first off-grid 5 megawatt green hydrogen project. They've got 3 HAM projects which are more than 90% complete in Adani Road Transport. Defense and aerospace, 1,600 to 1,700 odd crores is the kind of defense segment revenues they're clocking in. You talk about their copper business where they've commissioned full stabilization expected in the third quarter. PVC business again, set to be commissioned over phases between FY 28 to 29. And the data center business as well, which is a big deal. And all of this sitting under Adani Enterprises. So with all of this said and done, I think the clear message is that the group is on the path of growth. And I think no one can actually shake the pillars of growth. Yes, there could be bouts of these kind of calamities that could continue to happen. And that's what Gautam Adani is addressing in his letter to shareholders as well. And those kind of bouts should not shake up the investors.
Yeah, and in very interesting points, you spoke about new industries, right? And what I found interesting when I look at these companies and I look at the group businesses is the interlinkages and the overlapping nature of quite a few of these businesses. So if you think about it, right? You have wind generation to a certain extent, you have solar generation. You have new industries that is now engaged in solar PV cell manufacturing, and they're making their own turbines, right? Or they've started making their own turbines. You have power generation on the one hand, both thermal as well as green, and you have energy solutions that is doing distribution and is doing smart metering. On that one hand, you have aerospace and you have airports business, where you have the land that is given to you, 8 large airports or 8 airports where they're reinforcing their place, but you have 600 plus acres of land which they're looking to develop with city side development as well. So there's a lot of overlapping of cement. Cement goes into this.
Alex, all of us will get really confused if you try to map out everything in terms of numbers that's happening in the group, right? For every Dharavi project, it's a landmark project. But there is also Motilal Nagar redevelopment, and this is Mumbai alone, right? And you think of all else that is happening. So it's staggering as to what's happening. I mean, at some point of time, MRO and other businesses will come into the fold. So Adani Group, a lot of other groups, right, are right, Tata Group, etc., are all ripe for global attacks. And I think this is served as a template for what will happen next. So, well, let's see how it rides. But, you know, while we talk about the macros and the letter as well, the question also is that these stocks, ever since September 18th, have bounced back so smartly. And at a point of time until day before yesterday, the uptick, the cumulative uptick in the market capitalization of the group was 1.8 lakh crore. A bit of profit booking yesterday, but Vaishali Parekh, if she has a view, I'd love to ask her that what's the call currently on this group after that initial burst has happened. Vaishali, any thoughts here?
Definitely. Actually, I've been watching all the Adani stocks very closely. And right now, my most convincing stock would be Adani Port, because there is no damage to the trend. The trend is intact. We are seeing good upward projection. So I think for those who would really want to get into the stock, I would say accumulate with the support of 1350, because of course I'm looking at a long-term perspective. It is going to be a positional trade. I would look at a target of 1550 to 1600 to start with. And besides that, if you look at all these stocks, Adani Green, Adani Total, etc., they all have really not performed because of these issues. But technically, they are also well placed. That Adani Green, I mean, if purely on technical terms, if I were to talk, well, the stock has corrected from the recent high of 2200 levels, and from here on we have seen a good consolidation taking place at 950, and now it's getting out of its consolidation. So I think at least for a return of around 1450, 1500 to start with, this still makes it a very attractive buy. So likewise, same view for Adani Total, etc. I think one should take this is an opportunity to get into the stock.
Technicals, it's an opportunity to look at a variety of these stocks. Vineet Bolinskar, Head of Research at Ventura Securities, joining us right now, as well as Ambrish Baliga, who's independent market expert. Vineet, I'll come to you first. And we've spoken about the group companies on numerous occasions when significant developments have taken place. But specifically on the statement that has been made by Mr. Gautam Adani today, speaking about the outcome from the Securities and Exchange Board of India and what the group has achieved. 89,000 crore approximately of group EBITDA from 50-odd thousand crore, 57% growth. How do you take the developments, and would you be a buyer in any of the group companies, and why?
So, it's a remarkable achievement that despite the distractions which impacted their financials, we saw the EBITDA move almost 57% to around 90,000 odd crores for the portfolio of companies. I think that is significant, and the kind of capacities that they're keeping on adding, I think we can easily see a 20 to 23% compounding of EBITDA over the next 4 to 5 years, well into the end of the decade. To my mind, I think, for a group to perform in this fashion at such a high level of growth tells you that, they have got substantial capacity to create capex, execute well, and ensure that the returns are justified. If you look at the entire market, a lot of FI selling has happened in the country because of concerns on valuations. And within that space, among the large cap stocks, virtually the entire Adani Group is available at a discount to fair value. So, if you take fair value as we calculate at Ventura over the next 3 years, we believe that, although the discount has narrowed, but we still believe that, there's 50 to 60% upside still remaining in the stocks from where they are currently trading. And herein, we believe that Adani Green, which has got a very large runway ahead of capacity addition from 16 gigawatt to 50 gigawatt, which is almost more than 3x, will be one of the biggest beneficiaries. If you look at it from a value perspective, we feel that Adani Total Gas is a very, very strong buy candidate, even after the rally we've seen in the recent days. And the other stocks which are there, Adani, Ports, offers you steady compounding growth as the company starts sweating its assets. You look at Adani Enterprises, we have got 4 or 5 new projects, all in sunrise sectors. We have airports, we have hydrogen, entire vertical, we have copper, data centers, defense, all veritably linked to India's growth story. Add to this the other couple of stories also, they also have got strong growth triggers of their own. So, we believe that, there is virtually no business in the Adani Group which is not going to do well. And, you actually struggle for choice as to which stock to buy, because ultimately, you want to restrict your exposure to a particular group at a certain level of portfolio.
An interesting take, Vineet, a difficult choice to make as to which Adani Group stock to actually put your money in, taking into consideration all of them have been growth engines. But let me also get in Ambrish Baliga. Ambrish, welcome to the show and a pleasure to speak to you as always at NDTV Profit. This is an interesting letter that Gautam Adani has written to shareholders, clearly indicating that you know, the Hindenburg report was not merely a critique of Adani Group, but it's a direct challenge to the audacity of Indian companies to dream on global scale. And this has just marked the beginning of a test that pushed every dimension of the group's resilience. Taking this into consideration and the green chit that SEBI has given right now, what would your initial comments be?
See, I mean, if you go back to 2023, when the Hindenburg report had come, we should remember that that was the time Adani Enterprises was planning to raise funds from the market. And that had to be stopped because of this report. But despite that, I mean, the sort of a growth which the group has shown clearly shows that if the funds were raised at that point of time, possibly the growth would have been much better. And because of these issues, I mean, most of the your FIIs as well as domestic institutional investors had not invested in Adani. And if you look at the mutual fund holding, compared to the weightage of Adani Group in the market, the holding of the mutual funds is very, very low. Now, with this final redemption, the final clean chit which has come from SEBI, I think will surely ensure that you'll have more serious investors, institutional investors getting into the stock. And I think the first part was seen, I think, yesterday when SBI Mutual Fund bought a huge, I mean, they bought a decent block. So I think this is just the beginning as far as the institutional investors coming back to Adani. And the performance anyway has been proven. And I mean, I'm quite sure that over the next 1 or 2 years, we should see much more of fundraise by the Adani Group in the market.
All right. Vineet, Amrish, thanks so much for joining us, and important statement as we pointed out to you over the course of the last half an hour or so. We've gone into the details of all of it, and of course we'll discuss this in more detail over the course of the remainder of the day as well. Do stay tuned though. Live market coverage continues, and we've got more action for you on the other side of this very quick break.
बहू, आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया।
प्रणाम दादाजी।
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं, घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं, ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
और ये कौन सी कंपनी के मालिक हैं?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो NDTV सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी सब विदेश जाते हैं। The best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, Real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy
CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome to NDTV. You're watching Know Your Company. I'm Hiral Dadia. And the company on KYC today is Indian Metals and Ferroalloys. I'm sure you're wondering why this company today. Let's quickly take you through the key questions that we need to ask the management as well. First up, the rationale behind entering the ethanol segment, because that is an absolute diversification that the company is looking at. Secondly, if you talk about the break-even points where the new plants and the ethanol unit will reach, because they are looking at capacity expansion. Ethanol unit is absolutely new as well. So at what level with both these actually hit a break-even? On number 3, you're talking about the impact of China's steel production cuts. Now, whether it does have an impact or not also is the key question over here. Moving on, the impact of EU carbon border adjustment mechanism. Now, what this does is it has stringent measures on the back of which the exports to the European Union have declined as well. Now, whether IMFA is a company which will see an impact of this, because this actually comes into effect on the 1st of January 2026. Moving on, if you talk about the 5th question that we have for the management, let's quickly take one that is, in fact, these are the top 4 questions that we're looking at as well. But moving on, let's quickly tell you about the company from here on. Firstly, IMFA, Indian Metals and Ferroalloys, is the full form of the company. If you talk about it, it was founded by Dr. Bansinder Panda in 1961. It's a fully integrated producer of ferrochrome in India. Apart from this, if you talk about ferrochrome, it's primarily used in production of stainless steel, and it has been expanding its capacity for production of ferrochrome. They've recently diversified into the ethanol segment as well. If you talk about its capacity expansion, it's increasing capacity by almost 35%. In fact, the capacity earlier was 284,000 tons. It's going on to 384,000 tons. And they've received approval to expand capacity further by another 200,000 tons already. In fact, they're setting up 120 kiloliters per day ethanol plant. That is the diversification that we're talking about. In terms of the raw materials that get used, chrome ore, coke, power and coal. And any fluctuations in pricing of any of these raw materials can have a direct impact in terms of the operating margins of the company. In turn, you're talking about the EBITDA and the profit margins as well. If you talk about the geographical revenue split, exports currently is 90% of their business. Domestic is around 10%. Now, with the new capacity coming in, will the domestic business exposure increase? That's the key question that we need to address with the management as well. So that is what we're talking about in terms of about the company. But let's quickly look at all the rating parameters. As always, you're talking about the income statement check, the balance sheet, cash flow and return ratios is what we will be looking at for IMFA. And you have the shareholding pattern, street credentials, valuations and the business outlook. Let's start with the income statement. If you pull up that one on the screens, you'll see the way it has moved. From a revenue of 2,670 odd crores, it's actually come down to 2,560 odd crores. The EBITDA has seen a marginal uptick from 488 odd crores to 531. Your margins have remained stable in the last 2 years at around 20-21 odd percent, and that's where they will probably maintain it as well going forward. And in terms of profitability, from a 324 odd crores, it's actually gone up to 514 odd crores. But that's with regards to your last couple of years. If you see their margin trajectory as well, it actually clocked in 31.1% back then in FY22. From there, it's pretty low right now. What it will take for the company to come back to that 30% plus kind of margin trajectory becomes a key from here on, because the gyrations that you're seeing in terms of raw material prices is having a major impact as well. In terms of the first quarter, the revenue saw growth of around 13%, margins a growth of around 736 basis points, EBITDA grew around 80%, and their net profit saw a growth of around 93 odd percent. But taking the aspects into consideration from the margin trajectory, a very flattish revenue growth, and the profit, which has actually been at around 516 odd crores for the last 2 years, we've given it a thumbs down right now. So that's the income statement, which is a thumbs down. Coming to the balance sheet, it's a very strong matrix over here because NDTV Profit has given it a thumbs up, and we'll tell you the reasons why. If you talk about the equity, that has remained stable for the company. The borrowings, though, have spiked up slightly, but the cash in bank is pretty okay at around 21 odd crores. The other equity aspect is increasing, a gradual increase is what they are seeing. And if you talk about the book value as well, from 1,873 odd crores, it's actually seen a growth to around 248 odd crores. So overall, with a zero debt kind of a picture on the balance sheet, in fact, the company is always looking to see that their debt to equity remains below that 0.5 times kind of a mark. It is an interesting balance sheet which is very stable and very strong, and that's the reason why a thumbs up on this one. Let's look at the cash flow matrix from here on. Now, if you talk about the cash flow as well, the operating cash flow has seen a growth from 151 odd crores to a 585 crores. So the operation cash flow which is coming in from operations is very strong. The profit number, again, the translation is good. The net cash flows, that has become negative, and that's only on the back of the expansion plans that they've taken. And hence, as of now, a neutral rating coming in from a cash flow perspective. Taking into consideration the return ratios as well now, if you talk about the ROCE, it has been on an upward trajectory. I think it was only FY22 where the company was able to clock in that 25-26% kind of return on capital employed. But last 2 years, it has been stabilizing in that 15 to 16% kind of a range. And in terms of return of equity as well, that 17 to 17 and a half kind of a range has been that stable number. So taking that stability in terms of your return ratios into consideration, we've given the return ratios a thumbs up. Let's move to the shareholding pattern now. Let's look at what the promoters are doing. 58.69. It's been absolutely steady at that. In fact, your FIs have been slowly, steadily increasing stake in the company as well. And this is data over the last 3 years. Your DIIs are also seeing some minor interest coming in there. And the free float is absolutely open for the public at around 36 to 38 odd percent. And that's the reason why a thumbs up, taking into consideration the kind of institutional interest which has been slowly increasing in terms of Indian metals and ferroalloys as well. So a thumbs up coming in on that front. Now let's look at street credentials. I don't think so anyone would want to give it any other rating but an up, because 36% is the kind of returns that the company has given to investors in the last 1 month. The stock has not only given returns in the last 1 month, but if you talk about the 6-month YTD, 1-year returns as well, they've all been in that range of 30 to 80 odd percent. And 5 years, an absolute multi-bagger, 925% is the kind of returns that investors have made on Indian metal and ferroalloys. But where from here on is going to be the question. It's the valuations. Now, valuations right now, taking the run up in the stock price into consideration, are looking expensive, because if you look at the 1 year forward at 2.2 times versus your 5-year average has been at around 1.2 times. So which is clearly telling you that that matrix is slightly expensive. That's the price to book. And the price to earnings, it's nearly double of your 5-year average. 7.45 is where your 5-year average price to earnings multiple is sitting at. But because of the run-up that we've seen in terms of the share price, that 1 year forward is looking at around 12.65 times. So yes, valuations are expensive on the back of which a neutral rating, because they do stack up with the kind of performance that you're looking at. Because if you talk about the outlook as well, they're optimistic about domestic demand. They're looking to maximize and maintain their EBITDA cost at around 75,500 tons kind of a level. They've said that the forex fluctuations and global uncertainty, that could be a major headwind for the company as well. And ethanol diversification, that will probably add nearly 300 odd crores in terms of revenue on a yearly basis. And the diversification will add nearly 8 to 10% in EBITDA margins as well. So the outlook is seeming pretty stable on the back of which a neutral rating. Now, let's understand the final performance of IMFA, that's Indian Metals and Ferroalloys. Income statement, again, is a thumbs down. Cash flow is a neutral. Balance sheet and return ratios are a thumbs up. On the next one, another 2 thumbs up coming in the form of the shareholding, because you have your FIs, DIIs who have interest here. Street credentials with the kind of returns it has given investors, it's a thumbs up. Valuations, because it is expensive but sits in line with what the company is doing, a neutral, and your outlook is also neutral. And the final rating of 5.5 on 8 is what NDTV Profit has given on KYC to the company. In fact, to discuss more on this, let us get in MD Shubhrakant Panda. Thank you, Mr. Panda, for joining us on the show. Always a pleasure to speak to you. My first question coming to you is more in terms of the pricing of ferrochrome. What is the impact of China's steel production cuts on the pricing and the demand? Because this is one of the most important aspects that anyone would want to watch out for.
So, you're absolutely right that stainless steel demand is what primarily drives ferrochrome prices. But the production cuts that you're referring to is largely in carbon steel. As far as stainless steel is concerned, actually, there has been a production pickup. In fact, if you look at the second quarter of calendar year 2025, which is the latest statistics which is available, globally, stainless steel production has picked up by about 3.3%. So, on the demand side, it is holding up. Where there has been a significant impact which has boosted prices is that there are cost pressures for non-integrated producers. And as a result of that, there has been a significant cutback in ferrochrome output worldwide. If you look at globally, there is a cutback of about 8% in the same second quarter of calendar year 2025. And if you look at India specifically, that is much sharper, almost a cutback of about 60,000 tons, which is about 16 to 17%. So in that scenario, ferrochrome prices have moved up in the recent past. And we are talking about, prices ranging in the 1,15,000 rupees per ton mark, as compared to about 1 lakh or thereabouts, 2 to 3 months ago. So that is where being an integrated producer ourselves at IMFA, we are looking to step up our production and both meet a requirement as well as make the most of the current situation.
Okay, so Mr. Panda, what's the kind of impact you're seeing on business on the back of price increase?
So, as I said, there has been a noticeable increase in ferrochrome prices, and that will have a positive impact on our bottom line, which is something that we had shared even before. While I cannot make specific comments about the ongoing quarter, but I can refer to something that we had mentioned earlier, which is that we expect the July to September quarter numbers to be better than the corresponding quarter, or more specifically the previous quarter, because of this improvement in prices.
Okay, what's the kind of capacity addition that you're aiming for from here on, and what is that revenue translation looking like?
So let me give a little background first. We are the leading producer of ferrochrome in the country with annual output roughly about 260,000 tons. The ongoing expansion, which is phase 1, is 100,000 tons per annum unit, which is coming up in Kalinganagar in Jajpur district of Odisha. Construction is underway and we are on track, and we expect it's 2 furnaces. We expect the first furnace to be commissioned by June 2026 and the second one shortly thereafter. So that will add about 35 to 40% capacity by next year, which is a significant up move, and that will obviously have an impact both on top line as well as bottom line. All of this is basically linked to our captive mines, where in phases we are going up from our steady state 6 lakh tons per annum ore raising to 9 lakh tons in the first phase and 12 lakh tons in the second phase. So in FY25, for example, we have already started inching up our ore raising. We crossed 7 lakh tons for the first time, and we will be by next year touching close to 9 lakh tons, which will sustain the capacity addition. The second phase, as you said, we have an in-principle approval from the government of India, from the government of Odisha, I'm sorry, for 200,000 tons. But we are also looking at what we can do to speed that up in terms of raising our capacity at a faster pace than we perhaps originally anticipated.
Okay, so that's interesting. So what's the timeline that we should be looking at, and what's the capital outlay for the approved additional capacity?
Right. So as far as the approved capacity, which is, or rather the one we are implementing, let me put it that way. So that's roughly about 850 to 900 crores capex, which not just includes the 100,000 tons ferrochrome addition, but also a 9 megawatt captive power plant based on off gas. And of course, being a greenfield site, there are certain site developmental expenses and all of that which are incurred. So that, as I said, is something that we expect to commission by next year. As far as the 200,000 tons is concerned, we have not really worked on the numbers at this point in time. So let me not go down that path. But suffice it to say that we have a very, very healthy balance sheet where we have zero long-term debt at this point in time, and we are very focused on keeping it that way. So even with the current expansion that we are doing, as well as future expansions that we have planned, and by the way, there is also a 120 KLD ethanol project that we're putting up, we are not really looking to take on any debt. I mean, for tactical purposes, from a financial planning perspective, we might take on some debt, but we are very clear that we will focus on keeping the debt equity ratio as low as possible. Under no circumstances crossing 0.5, but I doubt we will even get to get that far. It'll be significantly below that is what we look at. Simply be given the health of the balance sheet, as well as the cash surpluses that we're generating, and especially with ferrochrome prices picking up, that will be a further boost to the bottom line.
A boost to the bottom line in terms of pricing, low debt will be a positive as well. Any further capex, Mr. Panda, that you're planning beyond the first phase of investment, and what is the scope and timeline of that?
So beyond the phase 1 expansion, which is going on, as I briefly mentioned, we are putting up a 120 KLD ethanol project. This is a diversification, a move away from our core ferroalloys business, but there is a specific reason for that. Our Thiruvallur unit, which is where we have our ferrochrome capacity, has surplus land and various other infrastructure. Given that we have experience in the broader B2B segment, and given the significant increase in demand for ethanol due to the fuel blending program, as well as other sectors, where it is an input, we have taken this step. It's about 150 crore capex, and which is expected to yield a top line of about 300 crores and an EBITDA in the range of 8 to 10%. Once that settles down, we will review and decide if this is something that that we are able to sort of master, if that's the word I can use. In which case, we will commit more funds to expansion. But at the moment, it is limited only to the 120 KLD that we are putting up, and our focus, both in terms of management time and attention, is squarely on the core ferroalloys business, where the capacity is increasing, and we are of course also spending money on increasing our mining output, as I mentioned. So that's about another 1,000 crores. And what you may have also read about is that because we believe in a fully integrated model, which is backward integration into ore raising as well as power generation, we currently have roughly about 205 megawatts of captive power generation, which is primarily coal based, and about 4.5-5 megawatts is solar. But we are doing a pivot to hybrid renewable energy through outsourced projects. So we have tied up with two leading developers for 110 megawatts of hybrid renewable energy, comprising of solar and wind. And that will entail equity investments of I think between 130 to 150 crores as well.
Okay, with all of this, what is the rationale behind entering the ethanol segment? Because there's absolute diversification.
So as I mentioned, it is a diversification away from our core business, but we are not really turning our eye away from our core focus. But we had surplus. We have surplus land and other infrastructure, including bulk raw material handling facility, railway siding, etc. Given the focus on the ethanol sector and the increase in demand due to the fuel blending program, we've already reached 20%. That is expected to go up. There are various other avenues for the use of ethanol. So that's where we are, really making a small foray. And once that settles down and we feel that it will be value accretive in the range that we have indicated or beyond that, then we will look at further expanding capacity. For the moment, it is limited to the 120 KLD, which project we are putting up, which we expect to commission around February next year, 2026.
Okay, and what's the projected break-even points for the new Kalinganagar plant and the ethanol unit?
So look, ethanol is a small diversification. It is a product where it is a combination of the input raw material, which is grain-based ethanol in this case, and of course, the output, especially if it is to oil marketing companies, is also sort of controlled. So as I said, we are expecting 8 to 10% EBITDA margin in that. Now, let me focus on the more important thing, which is our ferrochrome expansion. I think it is important for your viewers to understand that we are extremely competitive on account of our backward integration, where the three major inputs which go into ferrochrome production is chrome ore, which is where we have captive mines. We do not buy any ore from outside. As far as electricity is concerned, again, that is captive generation. And as I mentioned, we are doing a pivot from coal-based power to hybrid renewable energy. And the third major component is metallurgical coke, which we of course import. But that is something where we have various sources of supply. Although we focus more on the low ash, ultra low phos, low ash variety. But that is the only input which is not really under our wings, so to say. So we are fairly competitive in as much as our cost of production is concerned, which is what is reflected in a steady state in EBITDA margins upwards of 20%. And for the foreseeable future, because of the increase in ferrochrome prices, we see that number bumping up a little bit further.
A further bump up in terms of margins from that existing 20-21%. The European Union Carbon Border Adjustment Mechanism, that is CBAM, that will be implemented from the 1st of January 2026. What is the kind of financial or operational impact that you're seeing on your company, if any?
So again, what I would like to mention here is that in as much as our offtake is concerned, we are primarily exports at the moment, but that is directed at the Far East to Japan, Korea, Taiwan, etc. And we currently have practically no exposure to the European markets. But there again, given the pivot that we are looking at to hybrid renewable energy, we do expect to be, to not have any issues. But having said that, I must clarify that the 100,000 tons capacity that we are adding, there is tremendous scope in the domestic market because, while globally stainless steel is expected to grow at a CAGR of about 5% over the next 7 to 8 years, in India that is closer to about 8%, keeping in line with the growth of the economy. And so from that point of view, we are looking at aligning more to the domestic market, especially from this expansion project. So that is the basic marketing strategy as far as we are concerned.
Interesting. Let's take my last question now. With the expansion that you're looking at, your current exposure to the domestic market is only 10%. Will you see an increase? If so, what will that look like? And secondly, if you're talking about the capacity expansion, greater mine output and higher share of renewable energy, what is the projection in terms of top line, EBITDA and bottom line looking like over the next 2 to 3 years?
Okay, so from a current 90-10 skew towards exports, we expect that to be, probably move towards 60-40 or something of that sort once our expanded capacity comes online. So clearly, we are looking to meet the domestic demand, which is definitely a priority for us, and we believe that there is an opportunity opening up there, which is what we're looking to address with this expansion. The second question you asked was, in terms of the impact of our, of all of this in terms of volumes. Let me be very particular. So we are going from currently about 260,000 tons of ferrochrome output. When the capacity is online and producing for the full year, we will that will add 100,000 tons. So we're looking at about 360,000 tons, and of course the ore and the power is for captive consumption. So that is not something that we sell. It's all captively consumed.
All right. That's a strong target to watch out for. Thank you, Mr. Panda, so much for joining us on the show. Always a pleasure to speak to you. In fact, that's all, folks, that we have on this edition. Thanks for tuning in to KYC only on NDTV Profit, for your profit. Lots more lined up on the other side. Please stay tuned.
बहू, आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया है।
प्रणाम दादाजी।
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं, घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं, ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
और ये कौन सी कंपनी के मालिक है?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड क्लास ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो NDTV सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all powerful tech guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Good afternoon, you're tuned into NDTV Profit with me, Shreyansi Singh. And first things first, let's take a look at the markets first before we get you the entire list of buzzers. Of course, the stocks that are buzzing away in trade at this point in time. Nifty is hovering close to day's low at this point in time. Sensex as well shed about 300 odd points, 307 points to be precise is where the Sensex is in terms of that downtick coming in. Let's also take a quick look at the sectors as well, and the sectoral picture in fact is looking tilted in the favor of red as well at this point in time. So Nifty, Realty, Media, IT, Auto, Defense as well as Finance are your top losers from within the sectoral pack. Other than that, there's FMCG and PSU Bank that are quite resilient at this point in time. So that's the entire picture that you have as far as sectors also are concerned. But let's quickly take a look at some of the list of gainers as well. There's a Tata Investment that is up, Minda Corp as well, up 8.5% on the back of that positive commentary coming in from the management. And when you take a look at this from within a Nifty 50 perspective as well, HUL, NTPC, Nestle India, L&T, Asian Paint, some of your top gainers. But on the flip side, there's a long list of losers as well. Tata Motors makes it to that list, down about 2% at this point in time. Wipro, BEL, Bajaj Auto, Hero MotoCorp and IndusInd Bank also make it to this list. Even heavyweight HDFC Bank is also down about 1% in trade at this point in time. So that's largely the kind of list that you have in terms of your losers and gainers, tilted in the favor of declines in terms of the advanced decline ratio as well. But let's move on. Let's get you an NDTV Profit exclusive in a mega push for the shipping industry. You do have the cabinet that is in fact all set to clear a big policy package today. This is in a bid to bridge the cost disadvantage gap versus other markets. Rishabh is joining in with all of those important details.
Right, the shipping sector is set to perhaps get a major boost today with the cabinet approval likely for several things, including this is supposed to be a holistic package for the shipbuilding sector, and this package includes a revamped financial assistance package as well as the 25,000 crore rupee maritime development fund that is expected to be approved. Now, this fund was talked about in the budget. And now it will head to the cabinet for final approval and the implementation thereby. Now, this maritime development fund, how these companies will get these funds will be linked to the local ship production content. So this is also to push Make in India and shipbuilding within the mega shipbuilding clusters that the government wants to develop. What we're also seeing is the fact that India has significantly faced a cost disadvantage versus other countries like Japan, South Korea, Vietnam, Philippines. And this sort of a package will help bridge that 25 to 35% cost disadvantage that India is currently at. What we're also seeing is the fact that the government will contribute about 49% of this 25,000 crore rupee fund, while the remaining, the 51%, will be picked up by major port authorities, other government entities, and other public sector entities as well, apart from the private sector and financial institutions. So we're seeing a sort of a joint venture collaboration on the Maritime Development Fund aspect as well. So the cabinet is expected to meet over the next few hours, and we'll perhaps have an approval and this boost for the shipping sector very, very soon.
Absolutely. This is a big boost coming as far as the shipping sector is concerned. Thank you so much, Rishabh, for getting us all of those very important details. And the cost disadvantage is something that this looks, in fact, to bridge as well. So that's a bit to help the shipping industry as well. But let's move on. Let's take a look at Swiggy, because that counter currently is near days lows as we speak. The company, in fact, is set to sell its entire stake for the 2,400 crore rupees to Process and Westbridge. And that's an important update coming in as far as Swiggy then is concerned. But tell you what, let's also try and move on and take a look at Minda Corp as well, because even that counter is in focus. It's one stock that is buzzing away in trade at this point in time, as you can see on your screens as well. 8.5% uptick there about coming in on this particular counter after the company shared their ambitious plans in the analyst meet. Let's go across to Anushi to get us the key highlights when it comes to Minda Corp as well.
Right, as I started the conversation with the revenue growth, it's a strong set of growth that they've outlined in their Vision 2030. Now that's what the company has come out with, wherein they're aiming for a 3.5 times jump in its revenue to about 17,500 crore plus of a top line that we can anticipate from FY30 onwards. And this comes with margin expansion in place. If you look at the margins also, they're expected to expand to 12.5% as compared to the current 11.4 margins that we are looking at. Even if you look at the other financial metrics, the debt to equity ratio is also expected to halve to about 0.3 times as compared to 0.6 times, which is the current ratio that we are looking at. And ROC is also expected to see about a 25% plus of a number as compared to 20% number that we are looking at currently. But how would this growth be driven? Now the company is planning that the growth will be driven through its investment in its existing businesses. This would be through higher premiumization in its products that they've outlined, which set of products would give a higher benefit, which would aid the margins also going forward. Even the exports, now that would have a higher push going forward, forming about 10 to 15% of our top line going forward. Even new product launches would be on the anvil. This includes EV kits, which is as well. For these initiatives that we are looking at, place 2,000 crore of a capex plan has also been outlaid for the next 5 years as well. We have seen a couple of notes as well on this. Now firstly, MK maintains a buy rating on the stock with a target price of 600, believes it is a well positioned as a structural compounder, while Nuvama also sees about a revenue to EBITDA CAGR of 28 to 30% over the next 5 years, implying a target price of 620 versus a 590 earlier. So this is the overall picture on Minda Corp.
Well, absolutely. That's the overall picture as far as Minda Corp is concerned. And that picture, in fact, is looking quite tilted in the favor of green. That counter is up about 9% as we speak. But speaking of buzzers, then we do have Vansh who's standing by with that entire list there. Vansh, which are the stocks that make it to your list?
Well, yes, thank you for that. So let me start off with Sudarshan Chemical. Now, the company has posted a Q1 FY26 results. Now, if we talk about the details, now they have posted a strong set of numbers. Now, revenue growth has been led by the acquisition of Heobac Colorants, and also the revenue growth was primarily seen from the pigment segment for the company. Also, the difference in the EBITDA and the PAT growth was due to mainly on the back of the higher interest cost where the company has faced on the back of the acquisition of Heobac Colorants as well. If we talk about the financials, what really stood out was the net profit that is up 60% at 47 odd crores versus 29 odd crores for the company. The second on my list is Bansali Engineering. Now, the company has revised their expansion plans, and in fact, they have reduced its expansion plans from 2 lakh tons per annum to 1 lakh tons per annum. Now, earlier this plan was to increase the capacity from the current 75,000 tons per annum to 2 lakh tons per annum. Now, the reasons for this change, the company has cited that that the smaller expansion can be increase the capacity from the current 75,000 tons per annum to 2 lakh tons per annum. Now, the reasons for this change, the company has cited that that the smaller expansion can be funded by internal accruals, and they are focusing and the large plan would have required further borrowing, which is against the company's policy. So this is one stock to be kept in focus as well. The third on my list is Dilip Buildcon. Now again, the company has been declared as the L1 bidder for the industrial corridor project in Kerala. Now, the Dilip Buildcon has a 74% stake in this current joint venture. Now, the project cost for this industrial corridor would be about 1100 odd crores, and the completion period for the project is estimated at 42 months as well. And the project will be completed on engineering, procurement, and construction basis. So, these are some of the stocks that remain in focus.
Absolutely. In focus and how Sudarshan Chemical as well, buzzing away in trade, 4% uptick thereabout coming in on that particular counter. But with that, it's curtains down on this edition of this show. Thank you so much for tuning in. You don't go anywhere because Profit Buzzers takes all of the action forward.
बहू, आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया।
प्रणाम दादाजी।
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं, घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
और ये कौन सी कंपनी के मालिक है?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो NDTV सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी सब विदेश जाते हैं। The best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Hi, thanks so much for joining in. You're watching NDTV Profit and this is Profit Buzzers. My name is Alex Matthew. Did I say that twice? Perhaps. But it doesn't change the fact. Let's talk about the markets. They are down about 0.3%. This is for the benchmark Nifty 50, trading at above 25,000, but just below that 25,100 mark. The broader markets at this point are more or less, or have been mirroring, but then you've got cuts of about 0.5% for the mid-cap index at this point, trading at very close to the low point of the day. So too the small-cap index, down about 3 to 0.4%. And I would hazard a guess to say that the market breadth has actually worsened over the course of the last 1 hour or so. That is indeed the case, trading at the widest gulf at this point, similar to what you saw very close to the opening. So you've seen quite a bit of chop and churn in the equity markets. That really is par for the course based on what we've seen over the last couple of sessions. And this is as a result of, to a certain extent, geopolitics and global factors, but also the run-up that you've seen in the equity markets since the start of September. It's been a pretty upbeat rally for the benchmark Nifty 50, where at one point we were up over 1,000 points from the end of August. But let's take a little bit of a closer look at what's contributing to this. I would hazard a guess to say it's once again HDFC Bank and ICICI Bank. That is indeed the case. The biggest contributors on the downside are once again, for a second day in a row, these two large private sector banks, and to a certain extent that is matched or balanced out by the likes of Larsen & Toubro, HUL, RIL. You have more declines than gainers. In fact, let's pull up the heat map for the benchmark Nifty 50 and you will see more red on the screen than green. But it's a better picture than it was at the start of trade today. In fact, there were more rows of red when we started off the session. But let's talk about the broader markets as well. If we can pull up the BSE 500, you'll see a few names that stand out. And
One of them was Minda Corporation, that continues to be one of the big gainers of the day, 9% higher at this point, and that's because of an investor presentation that was sent out yesterday, very close to the end of market, or in fact just after the end of market, and the management is talking about an outlook or a guidance for revenue growth that is quite considerable. Heading into FY30, they're expecting the revenue to rise by 3.5 times, as a result of which you see the stock in focus. Tata Investment is in the news on account of a stock split that was announced by the board, or that was vetted or approved by the board, and that is the reason why it's up and about. A few of the Adani Group companies in the losing end, but this is on the back of significant gains that they have had since the 18th of September, when they received that clean sheet from the Securities and Exchange Board of India. And to a certain extent, one can argue that profit taking coming to the fore right now for a few of these counters. What else is moving? Deepak Fertilizers up about 3% or so. Credit Access Grameen from the financial space up about 3% or so. Mahesh Orja joining us now, market expert. Mahesh, thanks so much for taking the time. Would you agree that in the near term, we're likely to continue to see a little bit of consolidation? This is par for the course after the run that we've seen in the recent past?
Good afternoon, Alex. Today we have seen some pressure on banking stocks. As we all know that banking result will not come much good in this quarter. So I think that is the reason we are seeing some consolidation in Bank Nifty, and we have seen some pressure on banking stocks, especially if you're looking from a private sector stocks. But if you are looking from my perspective, I think these downside will give investor a new entry, fresh entry they can take for 3 to 6, 9 month horizon. So that is the reason we are seeing some consolidation. Yes, if Nifty broken 25,000, 25,460, then we can worry about lower side. But till that, I think some time consolidation can take place.
All right. Important point that you're making. But let's talk about primary issuances. And as you've probably seen over the course of the last several weeks, the primary markets have been buzzing. A lot of fresh issuances, and this is another one that we're talking about. True Alt Bio Energy is the name of the counter that we're talking about. Not yet a counter, in fact, a company that is opening its IPO tomorrow. And we're joined by the management in studio exclusively, Vijay Nirani, who's the founder and managing director of the company. Vijay, thanks so much for taking the time. Let me set the context and ask you about this issue. 750 crore rupees of a fresh issue, a small OFS or offer for sale, 89 crore rupees. What is the objective? Why hit the market now?
At the outset, thanks a ton for having us, Alex. It's splendid. It's super exciting to be able to take our company, our passion to the public, to the markets. Bioenergy or biofuels has been the core of our being. And considering the push and the tailwinds that the government of India has, and the priority and the national importance this sector carries, we thought that this is there is no right time for us to take the company public, but looking at the growth opportunities, we said now that we're already the largest in manufacturing of ethanol by installed capacity, we also have other variants like compressed biogas and eventually sustainable aviation fuel. All these part and parcels of the biofuels gamut. The idea largely is to try and increase the energy output through biological sources, typically using grains and sugarcane derivatives, and eventually shifting focus to second generation or advanced biofuels. So we decided this would be the right time, considering the markets are right, and the opportunity for the company as well as the country is at its peak.
So 750 crore rupees being raised, and that's going to be utilized by the company, but what is the objective? What are you going to be using these funds for?
So of the 750 crores, 172 odd crores is going for capital investments into one of our plants that is getting converted into dual feed. Now, we currently operate 5 ethanol plants. All of them are mono feed.
Okay.
And mono feed meaning we use only the sugarcane derivatives, like the sugarcane juice, syrup and molasses. Yes.
Sure.
And now that we see that the focus between the government policies would be between grains and sugarcane derivatives, depending on the quantum of the product itself each year. So we then realized that it's always best to be flexible, one, so that you consume the most abundant raw material available, and also two, to help build up bottom line margins.
Okay.
So about 170 odd crores is going into the capital investments there, and we are almost finishing the capital expenses, whatever had to happen even before the issues open. So that's a good thing that we've done.
So that's at one plant. You said you have 5
That's
plants that produce ethanol at this point, and all 5 are single feed, mono feed.
So of the 5, like I said, 2 of them we have already converted into dual.
Dual, okay.
The third one, we are coming to the public markets to raise capital.
And what about the other 2? Will they remain mono feed, or will they also transition?
So of the 5, 2 will remain to be mono feed, because we have more than ample required molasses within one of our group companies, and also the molasses balance across our geographical area is too large.
Okay. Where are these plants located?
Most of them in the south of, in the North Karnataka, in the south of India.
So, and so therefore, where are you sourcing your feedstock from?
So currently the feedstock, that is molasses, typically came from the sugar mills in and around, part of which was also our group company, and also in the open markets that we were getting. So back on the proceeds, so 172 crores is going back on to CAPEX, capital investments, and typically this business revolves around your gunpowder on what kind of a working capital limit you can have. Because the price of the raw material has a huge variance, especially the commodities, if you track commodities, right? The idea is to try and build enough raw material and have it as inventory, so that you can keep having a stable bottom line or an improved bottom line. So about 425 odd crores of the issue is going in for working capital requirements.
Okay.
And the rest is general corpus.
General corporate purposes. Okay. So to delve a little deeper into the economics of it, you are moving to a dual feed, right? Or is it multi-feed?
It's multi-feed now.
Multi-feed.
Yes.
Okay. So you're moving to multi-feed, which essentially means that you will use grains like maize, you will use grains like rice to supplement as and when required the molasses and the sugar cane feed that you get. In fact, we're speaking on a day when the government has announced that it is not increasing the ethanol prices derived from a feedstock of sugarcane. So can you explain to my viewer why this is important, where you have a dual or multi-feed approach, where you can perhaps in certain situations improve the yield of the ethanol that you produce by using different raw materials?
Yes. So if you look very closely on the policy that has come in, or rather the tender that has come in, they have increased the price of ethanol derived from rice. And also they have prioritized rice procurement this year, because the stock of rice in the country is at its ever highest. Yes. Now, another principal reason for us to becoming flexible in terms of feedstock consumption is exactly that. So whatever government has priority to push, and we are ready to consume that. And we consume that and ensure that we have a healthy bottom line is the whole objective for us to be a multi-feed plant.
Got it. You've spoken about the raw materials, you've spoken about capacity. Am I right in assuming that the capacity, overarching capacity that you have is sufficient? You won't have to add capacity at this point?
No. So we could definitely increase the production capacities, but right now our focus is not to increase, because we're almost 2,000 kiloliters per day, and that gives us the potential to supply close to 6 to 7% of the gross demand on the EBP program.
Okay.
So in a fragmented business, it's quite large.
Okay, the EBP program is the ethanol blending program of the government, right?
Yes.
So coming to that, so therefore are your largest consumers the oil marketing companies?
Currently, yes. And also there are avenues for the industrial use, that is in your chemical industry, FMCG products. All of these also consume a lot of ethanol. And going forward, we have this potential, or rather a vision, to convert ethanol into sustainable aviation fuel.
Okay.
That's a big avenue.
So you mentioned ethanol being your largest business. You have biofuel, which you're getting into, compressed biogas, and you have this aviation turbine fuel, right?
Yes.
But that is something that you're working towards.
Absolutely.
At this point, in terms of revenue contribution, what is the size of ethanol as a part of the overarching pie, and the remaining businesses that you have?
So it's been almost about just 3 years for us in business, and we've been scaling up quite healthily. So out of the total gross revenues in 23, we achieved FY23, we achieved a revenue of around 760 crores. In FY24, we had a growth of 50-55% and achieved a revenue of 1280 crores. And in FY25, we achieved close to 2000 crores, about 1980 crores. So there's a steady growth of almost about 50-55% year on year, and we expect the same to continue.
You expect a 50-55% compounded annual growth in top line over what period?
I wouldn't exactly give you that guidance just there, but we expect the growth to continue in a similar momentum. That is duly because our capacity has also increased from 590 KL in 23 and 1400 KL last year and almost 2000 KL in the current financial year. So most of the revenues, about 97% of the revenues currently come from the sale of ethanol. I would say about 88% comes from the sale of ethanol, to be precise, and about 12% from the sale of ENA, that's potable alcohol. That's another quantum that goes in. And about 2 to 3% comes from sale of compressed biogas. We only have one plant right now.
Okay. In terms of margins, because that ultimately is going to be a focus as soon as you list, you're working towards improving the feedstock, and therefore your financial metrics should reflect that at some point as well. But where does it stand right now?
So over the years, if you see, our margin or our EBITDA in 23 to 25 has almost increased by 0.5-0.6% year on year. And it was at 14.4.
Margin.
That's the margin. That's EBITDA, I would say, EBITDA margin percentage. And last year we achieved close to 16% of EBITDA on total revenue. And we expect to continue that momentum. Reason being, we have this optionality to use the feedstock and map it to the different priced ethanol that is being taken up by OMCs.
What is the ceiling?
The ceiling currently for maize is around 71, and I would say the lowest bracket is for C-heavy molasses, which is at around 58 rupees a litre.
Okay. On sugarcane at the current price, one of the current manufacturers of ethanol was speaking to us earlier, and he was saying that you're getting about 37 rupee yield. Is that appropriate?
So that would be 37. On the revenue recovery of sugar in the sugar cane in itself.
Sure.
It's called the FRP rate, so about the fair and remunerative price. And if you're contributing the raw material price on the ethanol, it would somewhere be around a ballpark figure of around 37 to 40 if it's the sugarcane price on the ethanol contribution.
Okay.
But if you take the FRP price, it's almost at around 3670, something around that number, for a 10% recovery on sugarcane.
Okay, so I'm sure, and this is a fascinating conversation already. It's an exciting business to be in. One would assume that if we go to a higher blending, the market improves for you. But the last question that I have ultimately is the leverage and the gearing ratio, right? So what is the kind of long-term debt that you currently have on your books, and trajectory, where do you expect it to go?
Okay. So we've done a gross capex, and again, the company is relatively young, so we availed equity and debt to set up the facilities. And of those facilities, on a gross block of close to 2,100 crores as on date, I would say, we would have a debt of only about 1,100 crores, that is the term debt. And interesting fact is, all this 1,100 crores of debt is covered under the interest subvention scheme.
Okay.
So that's a good tailwind we have, where applicable rate of interest for us on that 1,100 crores of term loan on a gross block of 2,200 crores is only about 4.5%.
Okay.
So it's a very soft capital, which would help us create a good leverage or ratios for us.
Interesting. Okay, I wish you all the very best. Thank you so much for joining us in studio, and happy listing.
Thank you so much, Alex. Thank you.
All right, there you go. Vijay Nirani, the founder and managing director of Alt Bio Energy. The IPO opens tomorrow. Now, sticking with the theme, and I was referring to it, if you listen to this conversation, I referenced a conversation with another ethanol producer. In fact, that was Sri Renuka Sugars, and we spoke with the executive chairman, Atul Chaturvedi. He warns of a significant drop in value from ethanol, but remember that he is a producer of ethanol using the feedstock of sugarcane. Listen to what he had to say.
Sugar industry is now going to be seeing a much bigger crop, which is going to be harvested sometime the second half of October. So you would probably have a much larger sugar availability, and that could be a little bit of a dampener as far as the sugar values are concerned. But then at the end of the day, the industries will have to probably take a call basis what works best for them at that point of time.
Okay, let's talk about some of this in more detail, because one of the significant developments in the recent past that came through on sugar feedstock related ethanol is the removal of the cap for these companies to produce ethanol. And that was seen as a positive development. Of course, the latest development is looked at as a tad bit negative for a few of these companies in particular, because ultimately they were asking for parity in the pricing of ethanol that is derived from the sugar feedstock. Mahesh Ojha, coming to you on this one, would you have a positive view? One, have you looked at the IPO that opens tomorrow for True Alt Bio Energy? Two, do you have a positive coverage on any one of these ethanol producer or sugar companies?
I think if you are looking for a longer term horizon, more than 1 year, then one can apply for the same. But shorter term, I think much government policy are impacted to this sector. So I think wait and watch strategy could be a better for sugar sector. But if you are looking from a longer term perspective, I think Balrampur Chini and Praj Industries are well placed. So these two counter we can add in any dip for significant upside. I think the Praj Industry and Balrampur Chini has some more upside potential is there. So these two counter we can add. But if you're looking from IPO perspective, I think a longer term investor can apply for the same.
All right, let's continue to talk about this. And you referenced Praj Industries. And ultimately, this is a company that has benefited from the capacity generation in the ethanol space. And as India has moved forward in its blending story and moving to B20 right now, this is something that Praj Industries has been a focus point on. Neeraj joining me in studio right now to talk about some of these aspects. Neeraj, we've seen in past quarters, and particularly one of the talking points of Praj in the last quarter was about the delay in capacity addition for some of the clients, and that had a bearing on earnings. If things move in the direction that they seem to be going right now, with some clarity on the production of ethanol which came through from the government a short while back, and we have a new player in the market as well that is joining with an IPO tomorrow, the space seems to be very interesting.
Yeah, and you know, Praj has been at the forefront in terms of the technology for all forms of energy transition, right?
Yeah.
CBG, ethanol movement, and a lot more. And we're lovely to get in the founder, chairman of Praj Industries, Mr. Pramod Chaudhary, in conversation with Alex and me. Mr. Chaudhary, this is Neeraj Shah here. Good afternoon. Thank you so much for joining in. And it's lovely talking to you. Where do you stand currently on this whole energy transition theme, particularly on the ethanol side, sir? Because when, you know, there is I'm talking about the here and now. We had a small conversation with the sugar companies this morning, and they said that this whole move of not increasing ethanol prices for multiple years and even right now again is a bit of a step back.
Yeah, temporary. Currently there's a little bit of a setback, or I say lull, but it's a temporary. That's the way we look at it. And we are definitely looking at number of other developments which will become important in time to come. So that's the way we are looking at it. We're looking this as a chance for opportunity to bring out some new things.
Okay, sir. Could you talk about some of those developments or ideas that could come about, sir?
Sir, we are seriously looking at diesel. Diesel has been always kept aside. Now we are developing an additive for diesel, which can be another game changer in time to come. So that is, you know that diesel is not having any blending so far.
So, yes, we can hear you. Mr. Chaudhary, there will be a little bit of a lag when we speak with you because you're joining us on a live unit. But having said that, you mentioned diesel. Can you take us through what the applications of this could be? It could be a game changer, as you've pointed out, but what are the timelines that we're talking about?
The timeline is all dependent on the government's actions and all that, but we are definitely looking at use of some kind of a blending with diesel, which will also go with a different thing. This goes for stationary engines. You know, in Pune we had an exhibition recently, and today Honorable Minister also mentioned about that. So these are the new upcoming things, and we believe that this kind of a technologies will play important role. for both the sides, for diesel users, engines, stationary engine, construction machinery, and so many things.
Okay, so that's exciting news.
Potential flip into the.
Yeah. So let me ask you this: in the quarter gone by, one of the commentaries that we received was that your clients are delaying implementation of capacity addition, and this is because of certain uncertainties that came through. You mentioned a lull, but are you getting any messages from your clients to say that with the clarity from the government, particularly on sugar feedstock and the ethanol produced from that, that they will start implementing some of the projects that they might have put on hold?
Yes, definitely. I'm sure temporarily they were on hold because of some few things like the date availability and all those things. But I think slowly it will be going away. That's why I say the temporary lull is there, but it will go. This is my confidence.
Okay. Mr. Chaudhary, the other thing is there are notes which say that the ESY 26 tender provides continuity with control but strengthens grain-based ethanol structural edge. Would you believe there is a structural edge for grain-based ethanol, and do the current policies enhance that edge?
Sir, both the things will go hand in hand. I mean, the grain-based ethanol is also getting a lot of traction, and it is giving a good wider exposure to the farming community because the sugar-based, molasses-based, syrup-based is only restricted to the sugar industry. So I am talking about both sides. So others also will get a traction, definitely.
Mr. Chaudhary, we just spoke with a company that is transitioning from mono-feed to multi-feed model of blending of ethanol or creation of ethanol. Do you think that more companies will start looking at this as an option, particularly because there is a differential right now in the yield for something that uses rice as a feedstock perhaps, or maize as a feedstock? Do you think that more companies will look to have the option to use multiple grains?
Yeah, in fact, the government has come with a policy for a dual route kind of a plant. I think it is from the state government that you put up a corn or starch, we call it starch model, on a sugar model, and then there will be a co-processing, or it could be a kind of a multi-feed approach. So we'll find a lot of actions. We were the first one to introduce multi-feed long time back. Now it is getting a blessing from the government also. Multi-feed feedstocks.
Got it. Sir, what about Praj's own journey? I mean, where do you see the course of the next 2-3 years after having a phenomenal run from 2021 to 23, 24 or mid-24, mid-25? There's a bit of a consolidation in performance, if I'm not wrong. How do you see the next 2-3 years in terms of revenue growth, earnings growth, for example?
Sir, as I say that we are quite upbeat about the future of biofuels or bioproductions, and there are different, the aviation fuel will start flowing out. We are also attending to the US requirement of aviation fuel. I think just yesterday we have released one of the case where low carbon ethanol is becoming important. Like that, many things are happening in the world scenario.
Okay. Okay, Mr. Chaudhary.
No, I'm not talking about any numbers or anything. I don't,
Yes, we understand. All right. Mr. Chaudhary, thanks so much for joining in. Always enjoy speaking with you and look forward to the next chat.
Pleasure, pleasure. Thank you very much.
All right. Well, on that note, do stay tuned because we will be back after this very short break to talk about markets and a lot more.
आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया।
प्रणाम दादाजी।
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं, घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
और ये कौन सी कंपनी के मालिक हैं?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड ग्लास, क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो NDTV सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
In a bold and reflective letter to shareholders, the Adani Group Chairman Ketan Kulkarnney confronts the turbulence sparked by the Hindenburg report, not as a setback, but as a defining moment for Indian enterprise. From regulatory vindication to record-breaking financial performance, the message is crystal clear. Resilient isn't just claimed, it's proven. Welcome to NDTV Profit. I'm Hira Aldadia. In fact, let's go across to Alex Matthew, who's going to tell us more in terms of what the letter states. Alex, over to you.
Well, a letter was sent out by the chairman of the Adani Group, Gautam Adani, to the shareholders of Adani Green. And there are a couple of very big messages that are going out. The first is that the Hindenburg attack that took place at the start of 2023 was not just a critique of the Adani Group. In fact, according to Mr. Adani, it was a direct challenge to the audacity of Indian companies to dream on the global stage. That was a time when the group was looking at fundraising and looking beyond the shores of India to expand in certain businesses, and the timing of this seemed a little odd. Of course, at that point, a fundraise was just around the corner. That was the beginning of a test that pushed every dimension, according to Mr. Adani, of resilience for the group. Now, what happened after that? The culmination of everything that took place over the course of the last couple of years happened recently, where the SEBI verdict came through. It was a resounding and unequivocal verdict. It was a clean sheet that was given. What was in fact meant to weaken the group has ended up strengthening the group, according to Mr. Adani. And the final word from the Security and Exchange Board of India was that truth has prevailed. This is something that the group has maintained repeatedly over the course of the last couple of years through the hearing at the Supreme Court and eventually the verdict and everything that followed from that point. It was a powerful validation, according to Mr. Adani, of transparency, not just regulatory clearance. Now, what has happened over the course of the last couple of years is that the group has buckled down. It has reduced its debt, improved operational performance, and this is just one metric that describes that. The EBITDA of the portfolio of group companies has risen from 57,200 crore rupees to 89,800 crore, nearly 90,000 crore rupees in the last financial year, and is building from strength to strength. What does that growth rate look like in percentage terms? 57%. In just 2 years, that's a compounded annual growth rate of 25%, something that companies with much smaller bases can only dream of. Beyond that, you also have a significant expansion in the gross block, which has risen to as much as 6.1 lakh crore rupees. Now, this is to this point, of course, the plans for the group are pretty big, where you're talking about $100 billion that is going to be spent over the course of the next coming years to expand several large businesses, especially in the infrastructure space. But a strong message sent out by the chairman of the group.
Thank you so much for that, Alex, to get us everything that actually puts things into perspective from here on. But to discuss more on this, joining us on the show is Mark Mobius, co-founder at Mobius Capital Partners. Mark, welcome to the show, and always a pleasure to speak to you, as always, on NDTV Profit. I'm sure you've heard the letter that my colleague Alex took us through, which the chairman, that's Gautam Adani, has written to shareholders. Clearly, you know, I mean, the Hindenburg report is not merely a critique of Adani Group. It was direct challenge to the audacity of Indian companies to dream on the global scale. And it's actually marked the beginning of a test that pushes every dimension of our resilience. That's a very strong statement that has come in as well. As you know, SEBI has given it a clean chit in the Hindenburg case, and given your previous comments on the Adani Group and the Hindenburg report, this is bigger than just about the Adani Group. Your initial comments?
Well, I think, as I said, the whole thing was blown up completely out of proportion with the Hindenburg Group report. I didn't believe it. I didn't think it was significant. And what I said at that time is now proven to be true with the SEBI report. Not only the SEBI report, but the fact that the share price of many of the Adani Group companies have come back and have recovered a lot. So I think this SEBI report is just another indication that the Hindenburg report was completely out of line and was not really significant. I'm sorry to say that many investors in India and elsewhere were caught up on this Hindenburg report and lost a lot of money when the stock price came down. What they should have done, of course, was to hang on because there's been a good recovery and probably the recovery will continue. So the SEBI report is quite good. But the other thing I think we have to remember is that Adani is an infrastructure company in a big way, in addition to its other holdings, of course. But most significantly for India, India needs more infrastructure, and India needs more companies like Adani to build that infrastructure. So it's a very, very important company to survive and prosper in India and elsewhere in the world.
Absolutely. In fact, Mark, stay with us. Let's also hear out what Gautam Adani had to say in a reaction to SEBI's report clearing the group of all the allegations. Let's listen in.
Today, a cloud that had hung over us for more than 2 years has been lifted. SEBI comprehensive investigations has concluded by rejecting all allegations contained in the Hindenburg report from January 2023. It was your unwavering faith, your strength, and your belief in the company that sustained us throughout this period. This outcome belongs not only to the Adani Group, but also individually to each of you who stood by us, and for that support, I am deeply thankful.
So that was the comment coming in from Gautam Adani as well. Mark, how do you interpret this SEBI's clean sheet, not only for Adani Group, but for India Inc. as a whole?
I think the most significant thing is that SEBI is taking a more realistic stance and is becoming more friendly to companies, independent companies in India. And that's very, very important. As you know, globally, the big challenge for private enterprise, and this includes the US and other countries around the world, is the incredible growth of bureaucracy and regulations which hold back companies like Adani. And it's very refreshing to see that SEBI is now moving away from that kind of bureaucratic view and becoming much more realistic and friendly towards the private sector. I think more and more of this is needed so that you can see these companies grow faster without inhibitions from regulatory authorities. Now, that doesn't mean that SEBI should not continue to do its work to ensure that companies behave properly and in line with the law. But at the same time, you don't want to see too much regulation and too much problems with regulations which hold back companies like Adani. So this entire change is very refreshing and I believe quite positive for the Indian economy.
Right. And you also mentioned about your earlier assessment that the whole thing about Adani was overblown. Do you believe SEBI's investigation and its findings have actually restored investor confidence in the group and more broadly in the Indian regulatory framework?
Yes, I believe it has. And it has given a fresh light on SEBI and the way it behaves and the way it regulates. And I think that's very, very positive going forward for not only the big companies in India, but for India itself.
Okay. Mark, the other aspect is you've been a strong proponent when it comes to investing in the Indian markets go. When you talk about events like the Hindenburg-Adani saga, post that you also had Jane Street, which did come in as a short seller, with that follows subsequent regulatory outcomes which impact India's reputation as a stable and transparent investment destination for foreign investors. Your comment on this aspect, how would you as a foreign investor look at it?
Well, my faith in India has not changed. As you know, I'm a big bull on India. I think India is going to go from strength to strength, regardless of what happens to individual company stocks or the stock market in general. India is going to go from strength to strength. And it's companies like Adani who will drive India going forward because they're doing incredible work in infrastructure, in clean energy, in electricity value. And it's a very, very good thing to see a company like Adani prosper in India, not only in India, of course, but globally. But I think the important challenge is for India to build its infrastructure. And Adani is doing that.
Absolutely. Infrastructure with the Adani Group has been absolutely on the front runner aspect of it. Now, when you talk about foreign short sellers as well, Mark, they have been exploiting India. We spoke about Hindenburg, we spoke about Jane Street as well. And they are the ones as outsiders who profit at the expense of India. I mean, spreading panic, shorting stocks, and then walking away with billions. To this, the impact that retail investors see is huge. What would you have to say to investors in terms of dealing with aspects like this?
Well, the best thing is to take a long view. Don't listen to people like Hindenburg and others who try to bring down stocks and take a negative view. Now, it doesn't mean that research, whether positive or negative, is not important. It is important. But at the same time, you should not react from these reports unless you do your own research and go into it in more detail. And of course, when the Hindenburg report came out, if anybody did their own research, they would have found that a lot of the accusations, in fact, all of the accusations were baseless, didn't make sense. So I advise people to be very careful when they hear reports like that on the negative side. And I think this whole episode is proof that you have to act more independently and allow things to play out before making decisions to sell.
Okay, so Mark, that's for retail investors. But this entire episode, when you talk about it, do you think it actually affected the foreign investor sentiment towards India, number one? And now that the clean chit has come in, the commentary has come in, do you think it will actually strengthen the reputation as a stable and transparent market for foreign investors? Does it further boost that aspect?
I think it does help. It does help a great deal to see the SEBI report and to look at how Adani has recovered from the Hindenburg attack. So institutional investors are just like any other investors. They tend to panic sometimes and sell. But I think those who sold have learned their lesson that they shouldn't get panicked and they should do their own research and not react so quickly.
So Mark, when this Hindenburg report did come in and the kind of lows that the stocks hit, where we did see a lot of wealth erosion that happened, did you look at it as an opportunity to buy into the Adani Group? And did you have that conviction to buy? Because at that point in time, stocks were available at a pretty low valuation as well, and the correction that had come in. So were you a buyer at that point in time, or were there any hindrances that you faced?
Yes, of course. We waited until the market came down. Usually it's a good idea to wait until the market has already finished its bear phase and has begun to recover. That's when you want to invest. Unfortunately, for our new fund, we're waiting for clearance to invest directly in Indian companies, so we couldn't take advantage of that opportunity. But I think going forward, we certainly will do that.
Okay. And looking ahead, what specific measures or reforms do you think a body like SEBI could actually implement to further strengthen investor protection, market transparency, especially for large conglomerates like these?
I think the key, not only for SEBI, but for the SEC in America, for all regulatory bodies, is transparency. They should insist on transparency and not get involved in other issues, because with transparency, investors then can make their own decision. At the end of the day, it's the investors who should be responsible for their own investment decisions. The regulatory bodies should not drive that, but the regulatory bodies should drive the importance of transparency, of disclosure, full and fair disclosure. That is the key.
Right, a full disclosure, that is key. So would you, Mark, be a buyer of any of the Adani Group companies, taking into consideration the kind of growth that you're looking at? Because the letter clearly states the way forward. What they've said is the portfolio EBITDA has grown actually from 57,000 odd crores in FY23, nearing that 90,000 crore mark in FY25. You know, the EBITDA stands at 57% and the 2-year CAGR is around 25%. And their gross block has expanded as well to almost 6 lakh crores from a 4.12 lakh crores. Taking the growth that the company has achieved from FY23 to 25 and the outlook going ahead with the businesses, if you talk about green energy, if you talk about enterprises where you're sitting on the airport business, you're talking about real estate, would you be a buyer of Adani Group companies with the outlook that they have?
Definitely. And you can see what they're doing in the airport industry, which is very important and very lucrative and growing at a rapid pace. So that's an area that we want to look at. And of course, infrastructure in general, what they're doing in clean energy is very critical. And what they're doing overseas, I was happy to see that they have successfully done the port opening in Sri Lanka, which is a positive issue for Adani. And I think going forward, they should be growing globally, not only in Colombo and India, but other parts of the world.
Okay, so you're going to be a buyer as well currently in terms of Adani Group companies go. Now, moving slightly away from Adani Group as well, if you have to now say that, yes, the SEBI investigation has actually probably increased the confidence that FIs could probably have in a market like India, where valuations stack up with the opportunities that everyone is sitting on, though there are a few hindrances in the form of tariffs that you're talking about. There are concerns when it comes to H-1B visas as well in the US, because IT as a sector gets dependent on that. What is your overall stance at this point in time on the Indian markets?
Overall, despite the US tariffs, the Indian market should do very well. I'm talking about the economy. Of course, the stock market has come down, but the economy will continue to do well. And of course, following that, the Indian stock market will recover. Most important to remember that the software industry, yes, to some degree, is dependent upon Indian software engineers working in the US, but that's just one small part of the entire process. India is exporting software from India to all over the world. So that's something to remember. It can be done remotely from India. That doesn't necessarily mean that you have to have people in the US.
Okay. So, Mark, then what sectors would you be positive on? Because, you know, if the economy is expected to do well, a lot of reforms that have come in the form of GST as well, would you be a buyer of the domestic-oriented companies, or would you look at a portfolio which is a mixed match of domestic and export-oriented, and which sectors would they be?
Well, as you know, the two sectors that have been affected by U.S. tariffs is jewelry, gemstones, and garments, consumer goods that are exported to the U.S. So those are sectors that we have to be careful about and watch. Now, of course, if some of them have come down a lot, there may be an opportunity to buy. But generally speaking, you probably want to stay away from those areas. But then when it comes to other areas that serve the domestic economy in India, consumer sectors in India that are not export-oriented, then that's a very, very different story and lots of opportunities in that direction. And of course, the sectors in which Adani excels, infrastructure and that sort of area would be important as well.
Okay. So which sectors would you then eye? Because I think the last conversation we had with you as well, you were pretty much positive when it comes to Indian banks. You were looking at the pharma sector as well. Defense was another space that Mark Mobius was actually eyeing as well. Have you already made your investments in India on any of these sectors? Or are they still on your radar and you would advise investors to make investments?
Yes, those sectors are still uppermost in our mind, and we are going into them through ETFs. That's a very important sector exposure that we can have.
Mark, apart from these sectors that we've spoken about as well, when it comes to investing in India right now, the major concern everyone had was valuations. In fact, HSBC has actually upgraded India from a neutral to a buy. Harold Lind has a target of 94,000 in terms of where the Sensex goes. As compared to other emerging markets, where would you place India right now?
India is always going to be at the top of our list, and I could see 100,000 going forward. There's no question that Indian market is going to be very important going forward. Now, of course, there'll be downturns as we've recently seen, but these will be temporary. These will not last very long.
Are you right? You're looking at 100,000 on the Sensex?
Yes.
And what time frame are you looking at?
That's a big question mark. I would say within a year.
Within a year, you're expecting the Sensex to be at 100,000, and that's a very strong number that you're giving out, Mark. If that is the scenario, which sector will take the Sensex to 100,000? Any stocks that are on your radar that you would want to highlight?
I can't give you specific names, but because we're in the process of buying. But I would say the banking sector is going to drive Sensex to high levels, and companies like the infrastructure companies like Adani will also be very important to drive this growth.
And Mark, would it be the private banks or the PSU banks that you would be betting on?
I would say both of them.
Okay, so both private banks and PSU banks. And anything that you would buy when it comes to IT as a sector?
Of course, I'm particularly interested in hardware, electronics hardware, chips, software. Of course, software companies, very important, but the hardware aspect is a growth for India going forward, and that will be very important.
Okay. So again, hardware from the IT pack is absolutely important. And one investment tip, Mark, that you would want to give viewers at this point, apart from what we've already discussed, which is on the top of your mind, which we've not spoken about?
Well, in addition to what we talked about, I think the defense area is important because India will become more and more a major exporter of defense equipment. And that's an area that I think will be becoming more and more critical.
Absolutely, defense an opportunity to buy as well, but 100,000 on the Sensex, that's the key. And the investor trust that could be coming back to the markets on the back of the clean chit that SEBI has given to the Adani Group as well is what Mark is indicating. Thank you so much for joining us on the show. Always a pleasure to speak to you, as always, on NDTV Profit. So that was Mark Mobius, co-founder of Mobius Capital Partners, talking to us about the implications of the clean chit that was given by SEBI to the Adani Group on the back of the Hindenburg case, not only for the Adani Group, but for India Inc. as a whole, what it would mean from an investor community perspective, and the sectors and what he would invest in, with a target of 100,000 on the Sensex in the next 12 months. Completely out of time, but that is a wrap on this edition of NDTV Profit. Please stay tuned.
आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया।
प्रणाम दादाजी।
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं, घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
और ये कौन सी कंपनी के मालिक हैं?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो NDTV सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी सब विदेश जाते हैं। The best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
On this edition of Small Cap Buzzers, we have an interesting management in focus, and that's office space solutions that I'm talking about. Now, in the recent updates, the company has launched their first Gold Center Premium Workspace solution in Pune. Alongside that, they've also delivered a 67,000 square feet of innovation hub for eBay in Bengaluru. But to talk to us about these developments, along with the strategy forward, we are joined by Amit Ramani, the chairman and CEO and the managing director of the company. Hello, Mr. Ramani. Welcome to the show. Once again, it's a pleasure having you. Just on these recent developments, want to understand, the Gold Center Premium, along with that, even the Elite Centers that remains in focus because of its margins. Just want to understand, your perspective on these developments that have taken place.
So, Rishi, obviously, this is clearly towards the premiumization of the space that we've been doing over the last few years. We launched Gold about 4 years ago. Today, there are close to about 15 centers that are in that Gold portfolio. We launched Elite about roughly a year back, and I think has done really well with some of our large GCC as well as our multinational and local multinational clients. Both the products have been very well received. Elite this year, we currently have about 5 of them, which are either live or about to go live. And we plan to do another 5 of them this year. The product has done really well with these GCC clients that are coming into the country and are essentially looking to start off with, maybe in case of especially the mid-size GCCs, which start off with somewhere around 50 to 100 seats and then scale up. I think this product has done very, very well for us. Along the similar lines, we mentioned the eBay. eBay obviously has taken currently about 67,000 odd square feet in Bangalore with us. It's again one of our premium GCC clients that, in partnership with Zenov, we were able to close on with them. This is for, obviously, there's some of their strategic initiatives that they've launched globally, especially their AI-driven commerce strategy. And so this center reflects that. It's again at a very grade A plus property Embassy Tech Village, and in terms of the interiors that we have been able to do there are also grade A plus of any international level design quality and delivery that we have done for them. So that's around the Gold and the Elite. Typically, we look to essentially have a portfolio where about 85% will be the office flagship product, and about 15% will be a combination of Office Gold and Elite.
So of this 15% of Office Gold and Elite that we're talking about, just want to get a sense in terms of how margins differ across the two.
So more than the margin, Anishi, it's the pricing that differs, because margin profile in our regular flagship product also is reasonably good, depending on the structure that we have, either straight lease or managed aggregation, which is in our partnership with our landlord partners. So in terms of the Gold, it's typically about 15 to 20% higher than our flagship product. And in terms of Elite, this would be another 40% higher than our flagship product. So essentially a 20% delta between Gold and Elite.
Okay. Mr. Ramani, you had given a guidance of about 40,000 of seat additions for FY26. Just want to understand, currently, where does that number stand? And, do you maintain the guidance, or do you see an upside going forward in H2 of FY26?
So today, we had delivered about 135,000 seats. That was the starting point at the end of FY25. And which was basically a seat addition of about 39,000 seats that we were able to do last year. This year, again, the guidance is about 40,000 seats. And if I look at our current portfolio where we stand, I think we are well on track. We currently have about 161,000 seats. That is a combination of our total operational seats under fit out, under LOI. So if I use that number, we are currently close to about 161,000 seats that we are there. And this we are all just at the end of 6 months through the year. So we have another 6 months for that remaining 15 odd thousand seats that we need to curate and for FY26.
Fair enough to understand. Now, H2 is probably also, where you said that capacity expansion and the scale up would be comparatively higher than what H1 is. Just want to get your perspective on the same as well.
Yeah, so I think we are well on track to that number. As I said, our total seats are majority of them which are under LOI and fit out, which is roughly about almost out of the 161, almost about 16,000 seats are in that fit out and LOI stage. So those will go live as we speak. So I think a lot of capacity addition, almost I would say 65% of the capacity addition will happen in H2 of FY26.
Fair enough. Now, an interesting aspect that we are looking in terms of what's happening with the IT space is about the H-1B visa issue that we are seeing that happened over the weekend. Just want to get your perspective, considering that all the reports suggest that now more offshoring would be taking place. So how does that benefit you if you just take that as a perspective?
So, Anushi, if you really look at it, clearly the news is a bit new, so everybody is trying to get, the handle around it. But I think if I look at the total number of H-1Bs, there's about 7 lakh of H-1B visa holders that are currently there, both new and currently that are live. Even if half of them have get impacted, right? That's about almost 3.5 lakh people that will have some level of impact. While it's unfortunate for what's happening, but I think clearly, if I look at it from our industry standpoint, 3.5 lakhs people would almost be about 3.5 million square feet. So in the short term, my belief is that the companies will have to get those jobs done from somewhere. $100,000 per person to pay at entry-level jobs is a big number. And clearly, I think companies will choose to essentially relocate some of those jobs or relocate those individuals back to India. And so hence, I believe the offshoring will increase. In fact, even in the GCC strategies, I think companies will look at now having those jobs, which earlier probably were looking to be in the US, will now from day one essentially be in India. So I think it's a positive impact. Unfortunate what's happened with people who are in the US, but I think for the industry, this will have a very positive impact.
Fair enough. Thank you for that perspective that you've given. Coming to my final question, it's about the construction fit-out services that we've seen. In the first quarter, we've seen about a 13% of a decline or so in that particular segment. But the order book remains interesting over here. Just want to get your perspective on how the future quarters are going to shape up.
So clearly, I think if you look at the design and build business, it's a bit cyclical, right? And you're absolutely right that there has been a bit of a dip, but overall, from a overall pipeline standpoint, it remains robust and fairly strong. And, from our standpoint, we have given a guidance of about 300 odd crores for the design and build business. We are well on track. Today, the pipeline, in the current avatar, we are currently pursuing actively at the closure stage, almost about, I would say, 180 crores plus of business. So, from that standpoint, having done about 60 crores in the first quarter, I think we are well on track to, go surpass that. So 180 crores is the third party pipeline. And in addition, we have about 140 crores of guidance that we have given, which is from our own centers, which is called Office Transform. So if I combine the two, we are well on track to achieve our numbers for FY26.
Well, that was the earlier conversation that I had with the management of Office Space Solutions. But before we welcome in our guest for the day, let's see how the markets are doing currently in terms of the benchmark and the broader market. Pressure persists across sectors and across indices is what we are looking at. Nifty 50 seeing cuts of over 0.2%. While if we look at Nifty Bank, also not doing so well right now in trade. About 0.5% of a downtick there as well. In terms of sectoral picture also, if you are looking at a sea of red is what we are looking at, barring some of these indices. Nifty FMCG up over 0.7%, while metals and infra is doing relatively better, about flattish moves over there. But realty down about 2% in trade today. In fact, we are seeing pressure building from Nifty Media and Nifty Auto as well. Now, in terms of the broader markets, though, mid cap 150 and small cap 250, if you are looking at that as well, nothing much to talk about. We are seeing cuts of over 0.5%, even underperforming benchmark indices as well. Even small cap 250.2% of a downtick is what we are looking at. But let's talk about Office Space Solutions with the guest joining us today, and that's Tapan Doshi, research analyst of Catapin.in, joining us. Hi Tapan, welcome to the show. Let me start off this conversation. heard the management, it's a pretty strong picture that the management was giving in terms of how the outlook is going to shape up for the business while there are structural tailwinds in place. Want to understand from you, are there any concerns that we should anticipate for this particular stock?
Yeah, hi. Good afternoon and thank you for calling. See, overall, if you see, fundamentally the stock looks quite strong and the demand and all that. Again, as you discussed with the management earlier, that H1B visa will have a positive impact to this company. Now, see, they are going to expand on the tier 2 presence against occupancy is much better. If you see the last quarterly result was quite good, almost 3.5x jump on the profitability. And again, the EBITDA margin, the main thing is EBITDA margin has gone to almost 37.8%, which is quite a good jump from 30% earlier. Seat capacity is almost 40% jump year-over-year, and co-working segment also almost 9% jump on jump. So that all these things favors the company. Of course, there are some profitability in that. Now, if you see the depreciation cost is going sharply, but you know that because they are in office, so that will happen. And finance cost is one of the worry which they have to struggle. But I think looking at the prospects, and again, as you can see, the occupancy slowly and gradually is going to go up from 80 to 90% and tier 2 present. I think this stock is in a much better shape. The problem lies here is with the valuation. If you see it's almost trading at 84 PE, and it's a rich valuation. So because the prospects are good, that's why it is trading at such a rich valuation. So if anyone wants to enter, I think better will be they can enter a little bit out, and in SIP manner, once it goes down, they can buy for it. Still currently I feel that it is at a higher level.
Just the approach that we are seeing for office space solutions right now with the valuations in picture. But let's talk about another counter which is in focus today, and Bajaj Electricals is the stock that we're talking about. And this is after the company has approved acquisition of Murphy Richards brand rights. Mahima joined us with more details on this one.
Right, so Anushi, as you rightly mentioned, the stock is buzzing because it is set to acquire the rights for Murphy Richards going forward for countries that includes Nepal, Bhutan, India, Bangladesh, Maldives as well as Sri Lanka. They're set to acquire this from Glen Electric. In terms of the IP acquiring, this will happen during this year, and overall they have been, of course, Bajaj Electrical has been an exclusive licensee of Murphy Richards already, but now from here on they'll also acquire IP rights. In terms of just a brief about what Murphy Richards is, it's an 8-year-old company that has presence over in 26 countries and is into products that includes kitchen appliances, garment care and floor care products as well. So this is the overall view of what's happening with Bajaj Electricals.
Thanks for that, Mahima. Tapan, coming to you, what is your view on the stock?
See, Bajaj Electricals has not performed in last, you can say 4 to 5 quarters, and overall, yes, this news is coming positive, and now management is focusing much more on premium and non-seasonal growth. Okay, and the cost optimization they are working on it because the margin got hit last time. If you see the last quarterly result was not good as such. Of course, the main thing was that core customer products was down 10%, and there was an exceptional expense. That was a big hit. But I think from here onwards, because of course, this news plus the Diwali season and the GST rate cut and all this may boost somewhat the consumption, and that is where they may get benefit. And here I am little bit cautiously optimistic comparatively. Of course, lighting and B2C lighting and all that will do well, but still I think Bajaj Electrical has to perform accordingly. I think the stock has gone up, but there are much more better counters in this same segment. One can look at it at this level. I think one can wait and see the next quarter result, then they can start buying it. Still, I feel that there are much more consumer durable, better stocks like there you can see like Polycab and other stock which we can think about buying from here.
Okay, thanks for that view for Bajaj Electricals is what we are looking at. But other stock that we are talking about is Shankara Building, and this is on the back of the demerger that we are looking at. Once talk to us about what is the overall demerger picture that we are seeing and how is the stock performed so far?
Well, yes, so the company is separating its trading, retail and distribution business into a new entity called Shankara Build Pro. Now, the Shankara Building Pro, that is the main company, the shareholders will get shares of the new entity in the 1:1 ratio. Also, this was already sanctioned by NCLT back in 21st of August 2025. Now, the pre-demerger, the cost of acquisition for Shankara Building would be appropriated in the ratio of 34% for Shankara Building and 65% for Shankara Building Pro, which is another company. Now let's understand it with the example. Now before split, the shareholders own shares in just one company, that is Shankara Building. Now so any capital gain was calculated by netting of the investment value with the sale value. But post this split, now the shareholders will own shares in two separate companies, that is Shankara Building and Shankara Build Pro. So each share will have different cost of acquisitions for the tax calculation purposes. Now the cost of acquisition will be divided into 65% and 34%. So Shankara Build Pro will account for 65% of the cost of acquisition, and Shankara Building, that the main company, will account just for 34% of the cost of acquisition of the company. If you understand it with the help of example, in terms of the breakup, the new cost of acquisition for the initial 50,000 investment, the cost of acquisition from Shankara Build Pro, the new company, would be 65%, that is 32,900 rupees, and the main company Shankara Building will account for 34%, that is 17,000 rupees in terms of the cost of acquisition. So this is how the demerger play is looking like for this Shankara Building.
Okay, well, thanks for that update, Vansh. Tapan, coming to you, just want to understand your picture in terms of how are you viewing this demerger as, and what's your view on this counter?
See, the demerger was completely, in order to unlock the value. And if you see, they are expanding on non-steel and allied verticals. And if you see overall the margin expansion, they want to increase it because, beyond steel, there is always a problem with the steel. There is margin compression. Now they are working on it. Of course, they are going to grow their footprint on tier 2 and tier 3 cities. And of course, EBITDA margin and all that is stable. But I think this, whatever the demerger has happened, I think that will create a value unlocking as such. And EBITDA margin will also grow. And the management is quite positive. And actually, of course, the investor has to see from here how the two companies will perform. But at this level, I think one should hold this company. I think it looks like a potential good return from here as the value unlocking happens.
Okay, so hold is the current view for Shankara Building Products, so do keep that in mind. But another stock that we are focusing on is Wheels India, and this is a stock that has been gaining for a second consecutive session. In fact, if you are looking at the stock price now, it's up over 6%. But what's leading to this kind of a trigger in terms of the stock price? Let's bring in Varsha for more details.
Well, thank you so much for that. The stock is on the buzz. This is on the back of strong volumes that the company has seen. Let's talk about what this company does and what are the growth triggers when it comes to Wheels India. This company is leader when it comes to automotive wheels, make products for automotive and industrial as well. The key triggers for this company is, one is the FY26 capex. If I were to talk about, they're going to maintain at the same level of FY25, but the margin improvement is expected from Q2, and company will also benefit from the export orders in the next 2 to 3 years. Talking about the growth approach, one is contract manufacturing for one of the largest OEM, and also their technology tie-up with the Korean leading Korean manufacturer. These are some of the growth triggers that the company has, and the growth will be driven by contract manufacturing and of course the technology tie-up with this Korean manufacturer. Onto the guidance and outlook, if I were to talk about, high single digit is what growth is expected when it comes to FY26 with 7 to 8% of EBITDA margin, but they are expecting this margin to inch up. This is on the back of a higher value product or due to the change in product mix. Of course, they are also the export growth is also expected over the next few years on the back of order inflow. So overall, a good company to watch out. The key triggers would be their export growth, the margin improvement, and of course the technology tie-up and contract manufacturing with some of the OEMs.
Okay, well, thank you for that, Varsha. Tapan, coming to you on this now, FY25, you did see a dip in terms of how the revenue was for the company. Now for FY26, while the outlook is positive, margins mainly remaining stable as the previous years. Just want to get your reasoning in terms of, the uptick that we've been seeing in terms of this stock performance. What is your view regarding this company?
See, if you talk about Wheels India, currently I think that much more favorable things are towards that thing, because if you see the automobile industry has performed well now, that will help this company, and of course their automotive segment is growing a good way. And if you see the EBITDA also slowly and gradually getting positive on both the verticals. Order book is quite healthy. Now they are going to focus on export and premium mix. Of course, they are going to increase the capacity in wind and hydraulic segment, which is good thing because I think there the margin may increase. So debt to equity is around 0.84, which is quite stable. And I think overall, I feel that from here onwards, the outlook remains good now because the demand will be good for the next 2 quarters at least. So I think at this level, one can hold this stock. Of course, I am not saying it is going to outperform, but I think it's a decent return you can accept from Wheel India from here also.
Okay, so that's the view for Wheels India that we are looking at. Thank you so much, Tapan, for joining in and sharing outlook for various of these companies that have been discussed on this show. But with that, let's shift focus to the primary markets, and Glottis Limited is the stock that you should be watching out for as it gears up for its IPO, which will open for subscription from September 29 to October 1st, which is priced at rupees 122 to 129 with a fresh issue of around 160 crore along with a 1.13 crore shares of offer for sale that we are looking at. Now, earlier I spoke to the management. This is a logistics firm that we are looking at, specializing in multimodal solutions for renewables. Do listen into what the management had to say. Let me start off by understanding your business model and how you operate in the logistics space if we are looking at. I understand that about 95% or so of your revenue comes from the ocean freight side. So just want to understand what is your strategy forward once you come out with your IPO for FY26, as well as if you can give us a medium-term picture as well.
Yeah, madam. Thanks for interviewing us today, and thank you once again. Coming to Glottis, Glottis is an international freight forwarding operator. Here we handle exports and support the export and import services. So we right now handle close to 12,000 boxes, and out of this 80% comes from the import. And this predominantly an Asian operator, I would say. And going forward, we will be. You can see a lot of developments happening on the west side in terms of Glottis, and the revenue will generate from the west and as well as east will be balanced out in the forwarding month. In terms of strategy, looking into in terms of purchase of containers is one of the main key objective, I would say you. And the second objective is purchase of 150 trailers. These are the main 2 objectives we are going forward. This is a key strategy going forward, and backward integration is the main concept we are working on right now to cater our customers' needs.
Mr. Senthil will just want to understand now the objects of the issue. What we are looking at is, you're planning to increase your fleet. You want to reduce dependency from other players that we are looking at. For that, you're also you plan to purchase more fleet, and that is what you've outlined in your objects of the issue. Just want to understand the overall number that you have in place. What's the kind of strategy that you're looking forward? Currently, if we see you have 17 vehicles in place, where does that number go forward?
So with this objectives, we'll be targeting purchase of 150 trailers, and which will be doing a big kind of backward integration for our existing strength. And we will be also adding 1,000 brand new containers, which will give us a cost reduction compared with this current model what we are doing. So both this backward integration of container purchase and trailer purchase will also give us less dependency with our existing vendors.
बहू, आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया।
प्रणाम दादाजी।
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं, घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
और ये कौन सी कंपनी के मालिक हैं?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
The world's defining stage. leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी सब विदेश जाते हैं। The best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy time to invest in
CDSL for the long term? Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
welcome. You're watching India Market Close here at NDTV Profit. I am Mahima Vachrajani and with me is Neeraj Shah. Well, we finally have a sunny day in Mumbai today, but markets not very shiny for sure. The Nifty 50 down by about 0.2 odd percent. The Bank Nifty also seeing profit booking today down by about 0.5 odd percent. The Nifty 50 well below that 25,200 levels and the Bank Nifty also below the 55,200 levels as well. Let's try to pull up the Nifty 50 heat map and see as to what counters are buzzing in trade today. HUL leading the pack up 2%, followed by something like a JSW Steel, Power Grid, Tata Consumer. So some consumption names doing fairly well in trade today, followed by Nestle also up 1.2%, ONGC, L&T, Maruti up 1% as well. But something that's not doing well includes counters like Tata Motors, which is down by about 2 odd percent, Wipro, BEL, Edison, Hero Moto, as well as Ultratech and Tech Mahindra down by about 1 odd percent each. Let's try to pull up the sectoral heat map and see as to how sectors are doing. And FMCG leads the pack, largely led by names like HUL, Nestle, up 0.6%, followed by Nifty, CPS and PSU banks have been doing well and also up 0.3% today as well. Nifty Metal almost flat, but apart from these sectors, a lot of counters in the red. Nifty Realty seeing major profit booking down by about 2 odd percent, followed by Nifty Defence down 0.8%, Private Bank also down by about 0.8%, and Nifty IT also down by about 0.7 odd percent. Let's try to pull up the advance decline ratio because that will give us a picture as to what the broader end of spectrum looks like. And there you go. Of course, in favor of the bears today, 1500 declines versus that of 790 odd advances. So almost that 2:1 ratio. And that gap has been widening by the day is what we are seeing. But Neeraj, with regards to where mid cap and small cap is concerned, mid cap similar trends to where benchmarks stand.
Yeah, but not too worrying, Mahima, simply because the volatility index is not quite spiking up or anything. I mean, it's down about 1.08% for the VIX. So India VIX is not doing all too badly. Now, what's losing out? Non-Nifty 50 and on the Nifty 500. The Adani twins, Adani Power and Total, which have had a fabulous rally, are pulling back a bit today. PB Fintech has pulled back a bit today. E-Clerks has pulled back a bit today. So that one is down about 4% as well. And then I think sugar names. So while Balrampur present in the larger list and 3.7% lower, but I reckon that Sri Renuka and some of the others too would be looking slightly wobbly today, presumably, because the news hasn't been too positive. Okay, Renuka is flattish. Triveni actually is up 2%, so maybe Balrampur is a lone ranger of sorts. Everything else is quiet, but at least not in the red, which is a good thing. And then slightly lower down the order, I think the likes of Bharat Forge, Sagility India, and some of these exporting names also have some issues to themselves today. What's doing well? Minda Corp, on that note that came in from Nuvama and the fact that they've said that they're going to start their EV product production by FY26, that stock has zoomed. So up 11% as we speak on volumes which are much higher than what the 10-day average or the 15-day average for that one is. There is some strength in Sarma SGS, so about 4.5% higher for that one too. Keynes Tech about 3% higher as well. So some of these EMS related stocks are doing well in trade. Good Luck Industries or Good Luck India is up about 9% in trade as well on some bit of news flow, if I'm not wrong. So that is up. And the shipping companies, because I think there is some news flash that went on our channel as well, which said that some of these shipping counters, or there's some special status being given and some, measures being done for this industry. So keep an eye out for this bucket as well. Kush Bora, founder of kushbora.com with us on the show. Kush, good afternoon. Thanks for joining in. We are holding 2,500, Kush. That was what I thought was maybe, and maybe it is a critical level, maybe it isn't. But I remember you saying that 2,500 would be something that the markets may defend. Do you see that today, and are you initiating longs therefore?
Sure. Hi, Neeraj. First of all, very good afternoon to you and to all the viewers. Let me start with the summary first up. Buy on dips, still very much intact. And yes, we did mention that, 24,900 to 25,000, that's the support zone that should be held on to. However, there are a few areas of slight concern, if I might put them out there. Incidentally, the report that we put out today on our advisory was titled Winds of Caution. And, that's exactly what we're seeing play out on markets today. Let me just highlight a few factors. First, the FII selling in the cash segment has been very heavy. We often speak about the FII index long and short position, which has improved, by the way, quite a bit over the last couple of sessions as well. But they continue to remain sellers in the cash segment. That's a bit of a worry. Also, today's the fourth day, given how we are shaped right now. We could have the fourth day of a lower high, lower low formation on the Nifty, even on the Bank Nifty for that matter. So that's a bit of a concern. IT has been under pressure, and today we are seeing banking also seeing some profit booking. So some concerns definitely around the corner. But when we say buy on dips, it takes a bit of a courage to go out and buy when the markets aren't really doing all that well, right? So I will still say, as long as the support zone of 24,900 and 25,000 is intact, you should consider buy on dips. If you have a long position, continue to hold with a stop loss. If not, you could still buy. The reason being that the PCR is fairly neutral, put base around 25,000 is being held. Also 2550, that 38% retracement level has also been held on to. Briefly, we breached that today, but we've regained that ground. So all in all, there are signs showing that there could be the support zones which come in, and Nifty could hold on to them. And more importantly, the risk reward ratio from here on is very attractive. On the upside, you've got targets of 25,450 and 25,600 as well. So yes, buy on dips on the Nifty, and in fact, for that matter, on the Bank Nifty as well, very much intact.
Okay, all right. So buy on dips on the Nifty 50 as well as the Bank Nifty is what Kush is indicating. Kush, what would you go ahead and buy today?
After all that buy on dip stock, imagine if I gave a short call or two, right? So I'm going with two long calls today as well. One of them has to be from the banking space. So that is Indian Bank. Again, this is one of the rank outperformers. Whatever markets have done, whatever Bank Nifty has done has got nothing to do with the kind of moves that it has made over the last 6 months. Strength continues today. Also a good uptake on the back of very healthy volumes. 730 is the target. 707 is where you place that stop loss. The second buy call is on GPIL, Adani Power. So here too, we've had a good breakout over the last 7 odd sessions. Last 3 sessions, including today, have seen a good volume uptick and profit booking from the top, but that's more in line with what market is doing. On the whole, the trajectory, the northward trajectory is intact. 280 is a very near-term target. 265 is where you place that stop loss. And a couple of updates, if I may. Canara Bank is a stock that we've been discussing regularly. And the second target of 125, that was almost hit today, came very close to that. And Bank of India, that's the second call that we've discussed, just yesterday, for the first target of 123, that's been hit and still holding ground. So yes, PSU banks are the place to be, if you want to trade in this market.
Right. Now on to our stock of the day segment. We have Minda Corp today. The stock is zoomed in trade today, and this is because of the Vision 2030 that management has come out with. And Anushi joins us with more details as to what is a part of that 2030 strategy.
Well, thanks for that, Mahima. So the company had their analyst meet in which they discussed about the Vision 2030, and it's a tall set of targets that we are looking at. Firstly, in terms of 2030, they're expecting about a 3.5 times of growth in top line, and this is at the levels of 17,500 crore plus that we're looking at. This would be supported by margin expansion as well, wherein margins are to expand to 12.5% as compared to 11.4%. Other than that, they've also given a debt to equity, which would almost half to about 0.3 times as compared to 0.6 times. And even if you look at the return multiples, now ROC is expected to increase to 25% plus versus a 20%, which is the current ratio that we are looking at. Apart from that, the company has also given a set of growth drivers which would lead to the the targets that they've given in place. Firstly, investment would be in the existing businesses. Along with that, the focus would now be on higher premiumization going forward. They will also be focusing more on exports, targeting about 10 to 15% of top line coming from this side as well. New product launches would include more on the key EV kits and switches side, so we should keep this one on our radar as well. For supporting this kind of targets, the company has also outlaid a 2,000 crore of a capex line for the next 5 years is what we are seeing. A couple of brokerage notes also came out after the analyst meet that we are looking at. Firstly, MK, if you look at, they have maintained a buy call, and this is the target price of 600 that we are seeing, believing that it is well positioned as a structural compounder. If you look at, they're also saying that transformation from component maker into system solution provider is going to help the business growth going forward. Apart from that, Nuvama also came out with a note note wherein they've raised the target price now to 620 as compared to 590 earlier. With the Vision 2030 targets in place, they're expecting a revenue EBITDA CAGR of around 28% and 30% respectively. This is from, over the course of 26 to 28 that we are looking at. So they've also tweaked the EBITDA estimates by 1 to 4%, reflecting on these higher growth targets as well. Just on the last part, that's the analyst recommendation that we are looking at. There are about 8 buy calls on the stock, while 1 hold and 0 sell, which implies a return potential of around 2%. So that's the overall take on Minda Corp that we are seeing the stock passing in trade today on the back of the investor presentation that has come out.
Anushi, thanks a lot for that. What a superb move for Minda Corp. That is really nice. And now, the big voice of the day, and in a note written this morning, the team at HSBC has written a note on Asia Equity Insights, the quarterly piece, and they say that India now appears attractive on a regional basis. We move to overweight from neutral. Harold van der Linde, Head of Equity Strategy at Asia Pacific at HSBC, joins us right now on the show on that note and his view on India. Harold, always good talking to you. Neeraj here. Good afternoon. Thank you so much for joining in. I can tell you, a lot of Indian viewers who are watching this and will watch later on in the day are enthused by this. I would love to know what's the key reason. Is it reasonable valuations? Is it a turn on the cycle that you believe, or is it something else?
It's actually a combination of these, but a couple of other factors as well. So India is now more reasonably valued. That's for sure. It has underperformed all the emerging markets. So that's one thing. And we've spoken in the past about some of the concerns that we had about the Indian market. Valuations high, earnings expectations too high. In the past, there was no support from the monetary side, the fiscal side. But now all of that has kind of changed. The GST means there is fiscal support, interest rates are moving lower, valuations are more reasonable. And although I still think there is downside risk to Indian earnings, I think most of the downgrades we see now. I wouldn't talk about an initial recovery so soon yet. But if you look, for example, to the valuations versus the rest of the region, take China, for example, India actually starts to offer value versus China because China has been so strong and India not. So we think this is a good time to move overweight on India.
Okay. Harold, in your note, you mentioned that there is reasonable valuation. Is this reasonable relative to the past, or do you believe that the valuations will start to look a lot more reasonable because earnings growth may be around the corner?
Both. I mean, Indian valuations will always be higher for a variety of reasons. Indian companies are more profitable than companies elsewhere in Asia, but also India has got some capital controls. Not everybody can take their money out, so that creates a sort of steam pressure effect on valuations that moves higher. But now you look at, for example, and I think this is a market we need to look at for India, Korea. Look at Korea. Korea is up 40-50% this year. It has done phenomenal. China is up, what is it? Depending on what index you look at, 20-25%. India is, again, depending on what you look at, let's say flat. So there's been a very wide divergence in performance. And that also means that these valuation differences that we worried about in the past, have normalized to a certain extent.
Harold, hi. Mahima also joining in. I wanted to understand, you've said that Indian equities are attractive on a regional level basis. Just want to understand as to what exactly is India, standing out versus the Asian peers, apart from the valuation part that you talked about.
Well, I'm gonna start actually somewhere else with a story that has got nothing to do with India, and that's Korea. Korea has done phenomenally well because of AI this year. So the big story in all the markets globally is artificial intelligence. And people have played that through Taiwan. They've played that through Korea. These markets have rallied massively. Some of these stocks have done phenomenally well. Now what we see is that actually valuations are pretty high there. And people are hoping that there will be further earnings upgrades. And everybody's positioned there. Hynix is the second most overweight stocks in emerging market portfolios. most emerging market portfolios are up to the necks in TSMC, a Taiwanese stock. They have, on average, 10% of their portfolio in that particular stock. So everybody's very well positioned there. And I think they can't really surprise that much further on the upside. And India is almost the opposite of this. Nobody's there for the moment. The valuations look more reasonable. Yes, the earnings will probably be downgraded a little bit further, but not a lot. And maybe as we go into 2026, some of the benefits of the lower interest rates and the fiscal stimulus will support earnings a little bit as well. So I think on a 12-month basis, actually, I prefer to be in India than, for example, in Korea. And that's why we've upgraded. And that's the sort of, putting India in a regional context sort of story that we try to build here.
Okay. In terms of the inflow of global funds in India, what are the trends that you are anticipating for the next 12 months in terms of FI positioning as well? What is the anticipation and trends looking like?
When we start now, what we see globally is that the investor, whoever it may be, is not putting his extra money in the US anymore, but it's putting it in Europe and into Japan. Emerging markets haven't really seen inflows yet. There's talk about it that emerging markets should benefit from a weaker dollar and these sort of things, but we haven't seen the inflows. So the money has gone to the developed markets, Japan and Europe, as I mentioned. What has happened in emerging markets is that people have all skewed into one story. That's the AI story in Korea and Taiwan, as I mentioned earlier on, and have not gone anywhere else. They haven't gone to China. They haven't gone to India either. As now money comes back into emerging markets, that's an assumption I make as we go into maybe 2026 as well. Where are they going to put that money? Well, they've already put everything in one basket, Korea and Taiwan. So the additional money that comes into EM, I think, will go to China and India. And probably for particularly US investors, there will be a much bigger incentive to put into India. The question then is India looking attractive? Now, and this is what I just mentioned. The earnings downgrade cycles coming to an end. The valuations look more reasonable. The medium-term outlook for growth still looks okay in India. So I think that will then drive that money coming back into your market.
For US investors, would it need the thawing of the relationship between India and the US for the money to come in, even in first quarter FY 20 or 2026?
I think ultimately what people look at is simply earnings of companies and these sort of things. So that's what drives it. But of course, there are other factors that determine sentiment as well. That's the relationship between the US and India at the moment, and the sort of tariffs being imposed on Indian products at the moment. I am not overly worried about that. For the earnings that are being generated in India, in the Indian stock market, are predominantly generated in India. So you are not so exposed as a stock market to these tariffs as maybe some other markets have or do so in the past. But so I'm not overly worried about these particular tariffs. It would be good if they come down. I suspect they will come down at some point in time. We just have to see. But it's not something that I'm overly worried about. It's a sort of a sentiment issue.
This is interesting simply because, Harold, what you are telling us is that even if the relationship doesn't see a complete thaw, at some point of time, investors might ignore that and look at the earnings growth and the valuations come 2026. And if there was a thawing of the relationship, then that might add some luster, you reckon?
Yeah, I would say so. You see, in the end, if we buy stocks, we buy companies. We don't buy a country. You cannot buy India, right? It's, I mean, it would be very difficult. It would be very expensive. But anyway, but you can't buy India.
It's impossible.
Exactly. You buy a stake in companies. And it depends on how these companies are doing. And then you look at some of the larger companies in India. Where do they make their money? They make their money in India. So as long as the Indian economy is doing okay and these companies can make profits, then I think we'll be fine. It's only a small portion of the Indian market that's really exposed to those particular tariffs. But it's a sentiment thing. So if these tariffs stay, so it is. Here we are. We've priced that in to a certain extent already. If these tariffs come down and the relationship thaws a bit, which I suspect is going to happen, I'm no political analyst, I have no insight into this, but it's just something I suspect, then that would be a sort of added benefit, but it's not something that I hang my hat on or I hang my recommendation on.
and again, not from a perspective of you hanging your recommendation on, but the apparent thawing of the India-China relationship as well, does that have any implications for an equity investor or zero?
Well, I suspect that actually it's the thawing of that India-China relations that makes probably America reconsider what to do in this particular situation. No, I'm not a political analyst.
Yeah.
You guys are going to report it, so I'm going to see what you guys are going to say about this. but in a sense, these are political issues that are important for the sentiment of the market, and we'll see how it goes. But ultimately, you just have to step back. What do you buy if you buy stocks? You buy these companies. And what are these companies going to do? Now, they've had a difficult kind of year. Their stocks have come down. The earnings expectations have to come down. But I think, hey, that's probably going to help. The government is really helping on the fiscal side, is helping on the monetary side. Give it a couple of months and things will hopefully start to moving in a good direction again. And then nobody's positioned here. Then everybody will come into India. So we want to be early.
Harold, any particular sector that you're looking at that you're overweight on, or any contrarian theory that you're overweight on right now?
Yeah, so there's a couple of sectors I like. I've always liked actually is the domestic-oriented sectors. So some of the consumer sectors I like the banks, not overly expensive. That's something I would look for as well. Ultimately, if I look for India to buy Indian companies, I like to buy a company that's got a brand or a distribution network in India. So yeah, the banks have that. Some of these consumer names have that. I like the hospitals. That's a great story. Medical tourism is a big story across Asia. I mean, I know friends in Indonesia that fly all the way to Korea to get some plastic surgery or some shots and stuff like that. So Korea, India, Singapore and Malaysia, they are these hubs in medical tourism. And I think, although that's a really small business for some of these hospitals in India at the moment, I suspect that's going to be a growth business over the course of the next couple of years. So that's hospitals is something I would look for as well.
We've seen a lot of government policies in favor of consumption boosting, right? We've seen tax cuts, we've seen GST 2.0 coming in. All of this considered together, do you think this is just a near-term push, or this can actually structurally change and lift the demand in the consumption space from a 2-year perspective or a 3-year perspective?
Well, actually, for a structural change in consumption, you need employment. I mean, it's very nice if somebody gives you $100 and you can spend it tonight on a couple of beers or something like that, or whatever you like, right? But for you to say, I'm going to spend more, you want a job and you have prospects that the job stays and you have a good salary and these sort of things. So insofar, these fiscal stimulus help job creation, get people that and confidence, then I think this could be good for consumption. That's right. And the thing is also, if it doesn't work, the government clearly wants this to work. But if it doesn't work, then the government has to say, okay, what we've done so far doesn't help. Now let's do a little bit more. So they will respond to this. What they want is to provide that employment, to provide that growth. And I think that's the important thing now. We have the government going in that direction, and your central bank is trying to cut interest rates as well to support this as well. So there's two sort of pro-growth stories unfolding in India. That's quite positive.
Harold van der Linden, lovely talking to you this afternoon. Thank you so much for taking the time out and being with us. That's the HSBC view on India. They've upgraded India and this morning rather, and some of those themes might be interesting. The key part for me, Mahima, was that he's saying that investors would come to India starting 2026, irrespective of whether the India-US relationship sees a thaw. It is an important one, but not sufficient deterrence, because people will look at buying into companies with good valuations. So that to me is the most significant takeaway.
Yeah, I think even the part where he mentioned about tariffs as well, that out of BSE 500, only 5% is the exposure to that export, and India will be able to overcome that kind of tariff impact, if at all there is any. So that was also an interesting takeaway from the report. But moving on, in a bold move and reflective letter to shareholders, the Adani Group Chairman confronts the turbulence sparked by the Hindenburg report, not as a setback, but as defining movement for Indian enterprise. From regulatory vindication to a record-breaking financial performance, the message is clear. Resilience isn't just claimed, it's proven. Alex joins us with more details.
Well, a letter was sent out by the chairman of the Adani Group, Gautam Adani, to the shareholders of Adani Green. And there are a couple of very big messages that are going out. The first is that the Hindenburg attack that took place at the start of 2023 was not just a critique of the Adani Group. In fact, according to Mr. Adani, it was a direct challenge to the audacity of Indian companies to dream on the global stage. That was a time when the group was looking at fundraising and looking beyond the shores of India to expand in certain businesses, and the timing of this seemed a little odd. Of course, at that point, a fundraise was just around the corner. That was the beginning of a test that pushed every dimension, according to Mr. Adani, of resilience for the group. Now, what happened after that? The culmination of everything that took place over the course of the last couple of years happened recently, where the SEBI verdict came through. It was a resounding and unequivocal verdict. It was a clean sheet that was given. What was in fact meant to weaken the group has ended up strengthening the group, according to Mr. Adani. And the final word from the Securities and Exchange Board of India was that truth has prevailed. This is something that the group has maintained repeatedly over the course of the last couple of years through the hearing at the Supreme Court and eventually the verdict and everything that followed from that point. It was a powerful validation, according to Mr. Adani, of transparency, not just regulatory clearance. Now, what has happened over the course of the last couple of years is that the group has buckled down. It has reduced its debt, improved operational performance, and this is just one metric that describes that. The EBITDA of the portfolio of group companies has risen from 57,200 crore rupees to 89,800 crore, nearly 90,000 crore rupees in the last financial year, and is building from strength to strength. What does that growth rate look like in percentage terms? 57%. In just 2 years, that's a compounded annual growth rate of 25%, something that companies with much smaller bases can only dream of. Beyond that, you also have a significant expansion in the gross block, which has risen to as much as 6.1 lakh crore rupees. Now, this is to this point, of course, the plans for the group are pretty big, where you're talking about $100 billion that is going to be spent over the course of the next coming years to expand several large businesses, especially in the infrastructure space. But a strong message sent out by the chairman of the group.
Most certainly a strong message sent out by the chairman of Adani Group of Companies. Now, Sensex could reach 1 lakh in a year's time. Yes, that's what Mark Mobius, the co-founder of Mobius Capital Partners, prediction is. Speaking to NDTV Profit on Adani Group's clearance of the Hindenburg allegation, Mobius reasoned why one should look at investing in the conglomerate, citing global growth, and also explained his 1 lakh target for Sensex. Let's listen in.
And you can see what they're doing in the airport industry, which is very important and very lucrative and growing at a rapid pace. So that's an area that we want to look at. And of course, infrastructure in general, what they're doing in clean energy is very critical. And what they're doing overseas, I was happy to see that they have successfully done the port opening in Sri Lanka, which is a positive issue for Adani. I think going forward, they should be growing globally, not only in Colombo and India, but other parts of the world. India is always going to be at the top of our list, and I could see 100,000 going forward. There's no question that Indian market is going to be very important going forward. Now, of course, there'll be downturns, as we've recently seen, but these will be temporary. These will not last very long.
आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया है।
प्रणाम दादाजी।
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं, घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
और ये कौन सी कंपनी के मालिक हैं?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो NDTV सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy
CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Welcome back. You're watching India Market Close on NDTV Profit. Let's just quickly take a look at what's happening in terms of markets as well. FMCG as a sector, which is seeing some smart moves right now. If you pull up the consumption or the FMCG pack, you'll see the kind of gains that are coming in. There you go, near the day's highest levels. Some cooling off has happened, but names like HUL, Tata Consumer, Nestle, Britannia, United Spirits, all of them seeing good moves. Warren Beverages is the one rolling under pressure. In fact, the pressure on that one has continued since the time GST rates have been announced. ITC pretty much on the borderline. Godrej Consumer also seeing some cuts in trade. In fact, Kush, let me take a quick question with you with regards to where consumption goes. Taking into consideration some bit of recovery that has come in over the last couple of trading days, there was a slump. Would you be a buyer currently of any of the names, and if so, which one would that be?
Sure. Hi, Hiral. No, not really. Not really. Some of these stocks have had a very sharp run. Look at the likes of Britannia, even Tata Consumer for that matter. A lot of names have had a good run. What you are seeing today is a bit of a short covering from, some support levels. So the Nifty FMCG index itself is at the 200-day moving average, taking support there and rebounding. So this is more of a short covering rally, which is at play in some of these names. It'll take time for this to convert into a fresh round of momentum. So I'll be very selective. In fact, Varun Beverages, as you rightly mentioned, has been reeling under pressure. And now the medium term, a very strong support zone of 450 is once again, at test. If this is broken, I'm afraid 440, 430 could also be tested at lower levels. So this stock has underperformed and might continue to remain under pressure. One stock that I do like in this space is actually Tata Consumer. Hasn't really gone with what the sector and a large part of the stocks are doing. It's charting its own course. So on the upside, 1175, 1200 are very much likely on positional level, and 1120 is a good support zone. So that should act as a stop loss if anyone's initiating a fresh position. So barring a stock or two, I wouldn't really bet on the sector as a whole just yet.
Okay, so you would not bet on the sector as a whole currently with regards to consumption. But coming back to our bull versus bear segment today, an interesting company that we are talking about is Premier Energies. If you talk about the stock, up nearly 3% in trade. In fact, it surged and then it has come off slightly. So is it the bears or the bulls who are having control right now? Let's head across to Varsha to understand. Varsha, over to you.
Well, thank you so much for that. A lot of things are actually working when it comes to Premier Energies. Let's start with the one wherein India has an ambition target of a 500 gigawatt by 2030, and this will actually benefit Premier Energy because of the increased demand. But because of the huge expansion and because of this ambitious target by India, there will be overcapacity in module, which could hit margin for Premier Energy and of course for whole lots of module and cell companies. But the order book for a company which is around 8,000 crores adds up to the revenue visibility. But again, the aggressive expansion may lead to underutilization of assets if demand doesn't keep up the pace. But onto the a bull's case, if I want to talk about, the policy environment is a major tailwind leading a buzz in this sector. You have ALMM, you have GST cut rates from 12% to 5%, which will actually boost demand when it comes to a whole lot of solar supply chain. But solar currently is heavily dependent on China. Almost 75 to 90% of the market is controlled by China, and this is one of the risks that whole sector is been facing. But the good thing over here is the backward integration plans that Premier Energy has, into ingots, into wafers, into cells, will actually control the supply chain. But again, the healthy margins that you are seeing today may not be possible after 28, 29 because of huge competition. There may be pressure in the realization because a lot of competitors will come up. The demand would not go that much up, and there will be oversupply which could hit the margins, which could hit the realization. So maybe after 28, 29 you cannot see the healthy margins that the company is showing. So overall, yes, if you see, there are a lot of tailwinds when it comes to government policies, but one should also consider the headwinds in the overall sector which will have and which will be borne by Premier as well.
Wow. Okay. Well, thanks a lot for that. Remember this sector, Varsha, thanks for putting that. And the sector is, of course, in a bit of a state of flux as well, with the various moving parts. But must say, Premier or Wari or some of the others have held their ground. Wari too, still knocking on the doors of 3,600, 35 something, or 3,500 to be precise, 3,497, right? So that's about 3,500. Not bad going for some of these stocks. Kush Bora, are you constructive here? Wari, Premier Energy, some of the others?
So not so much on Wari, Neeraj. It's been in a range, 1,000 on the downside and on the upside, 1,080, 1,090, not going anywhere. You've got a few bright days of a good up moves, but those are being sold into. Wari, on the other hand, has had a good run. It's had its share of volatility, but I think it's taken support at 20 and the 50-day moving averages. And if you see the broad trajectory on this one is up. So if I were to bet on one of these two, it would definitely be Wari Energies. And I wouldn't be surprised to see the recent swing highs of about 38, 38.50, once again being tested on a positional basis. And on the downside, it's got support near the 3,300 mark, so that should act as your stop loss. So Vari, a preference over Premier Energies.
Okay, Vari, a preference over Premier Energies, and all of these stocks have actually seen somewhat of a run-up in the last couple of trading sessions. In fact, let's also get in Vineet Bulinjkar from Ventura Securities to join in. Vineet, good afternoon and welcome to the show, and always a pleasure to speak to you at NDTV Profit. Taking this entire sunrise sector, or a sunshine sector as we would have coined it, into consideration, and the kind of opportunities and expansion plans that all of these companies are sitting on, where do valuations stack up according to you? And would you say this is a good time to look at them? Because you have a Vikram Solar as well, which is recently listed. I think Satvik is another one which is coming up with an IPO in the same space.
So, we need to differentiate between fully integrated players versus the ones who just manufacture the the boards. I think that Vari and Premier fall into the earlier category, which is favorable. And, just to support Kush on what he's saying, I think, this Vari Energies does look interesting. And the management has been very, very astute and savvy to shift its business model in line with how the geopolitics has been shaping up. To add more to this, I believe that as there is a geopolitical event where the Americans are trying to consolidate their hold on the oil economy, I think India as a country will have a strategy of wanting to de-risk itself from the oil vertical as much as possible. And to that extent, the tailwinds come from this angle, as well as from the angle that, AI is going to be a dominant power guzzler. And when you need green energy, I think Vari Energies and Premier Energies will do rather well.
Okay, so Vari and Premier Energies, these are the ones which would probably do well as compared to the other ones. In fact, the other story that we're tracking right now is in terms of the insurance space. In fact, if you pull up a PB FinTech, that stock has been trading under pressure in terms of today's session. In fact, IRDAI has met all the insurance companies. And if you pull up all the insurance players which are listed, let's see what they are doing in trade, from a SBI Life to a HDFC Life, ICICI Lombard, all of them seeing some amount of pressure, but it's PB FinTech which is seeing the maximum pressure in trade as we speak. In fact, it's rating exclusives on NDTV Profit, and sources do tell our colleague Pallavi that insurance industry is seeking lower GST commissions. Pallavi joins in with all the details. Pallavi, over to you.
Right. So what we have been picking up is that the insurance industry, the general insurance industry specifically, has been in ongoing discussions with the government, and they are seeking lower GST on commissions or distribution costs. So, what the backdrop for these discussions is that the industry had been pushing for some relief on input tax credit post the GST 2.0 coming in, where general health insurance as well as life insurance has now been exempted from GST. That was a little bit of a challenge to insurance players because they were not able to offset input tax credit that they were earlier doing. So now, since that does not appear to be an option post the clarification which the government has brought out, they're now seeking other ways to bring down their costs, and this is one key demand, that is to lower GST on commission and distribution costs. The reason being that acquisition costs tend to be a fairly large expense for these companies. So promoting sales of insurance policies, they say, will also help deepen penetration, which is what the government's rationale was for exempting life and health insurance from GST. Already, so when we speak to experts, the sense we're getting is that there will be some impact on bottom line of companies, especially those which rely largely on health insurance in their their portfolio, those with a more diversified portfolio are expected to see less of an impact, but those with some heavy weightage of health insurance in their portfolio will see some impact on their bottom lines for not being able to adjust input tax credit, and hence the demand.
Thank you so much for that. In fact, you have a PB fintech which is trading under pressure because it will mean that the insurance company will probably pay less to PB fintech, and that's the reason why that pressure, 3.5% downtick coming on that one. Another stock that's buzzing in trade today, we have all cargo logistics, which all cargo Gati. In fact, that stock is buzzing in trade today. If you see right now, it's seeing pressure to the tune of 1.7, 1.6%. Let me get in the management, Mr. Ketan Kulkarnney, MD and CEO at All Cargo Gati. Mr. Kulkarnney, welcome to the show, and always a pleasure to speak to you at NDTV. Taking into consideration the GST bonanza, which has led to a boost in consumption, that is what everyone is talking about, at least from the auto sector. Whether that has translated or not when you talk about FMCG or from a retail perspective is what we're still figuring out. What is that festive season demand doing to a all cargo Gati from a business perspective? Is that creating a boost for you as well?
Hi, Tamanna. I hope I'm audible. Hi. I hope I'm audible.
Yes, you are.
Great. Nice to be on the show with you. We represent All Cargo Group, and today at All Cargo Gati, we have the express business, and under the All Cargo Logistics, we have the supply chain business, which is ASCPL. So most of my comments today will be on the ASCPL side, where we do warehousing and contract logistics. The festive season has definitely started. We're seeing a trickle, and we expect that trickle to grow exponentially in the days ahead. Whichever newspaper we pick up today has the first 6 or 7 pages with only announcements of how consumers should consume and the various products. For the festive season, we have added about 5,000 plus people on the handler side, and we have increased space by about 500,000 square feet in 6 to 8 tier 1 and tier 2 cities. So we are very well geared for the festive season on the supply chain side of the business.
Ketan, hi. Good afternoon. Neeraj here.
Hi, Neeraj.
Just trying to understand. So I was just thinking about your opening answer. So you're saying that your comments would be more applicable for a particular subset of the All Cargo Group. So it's not All Cargo Gati. Is it All Cargo Logistics, or is it some other business?
It is the All Cargo Supply Chain business, which is the subsidiary of All Cargo Logistics. All Cargo Logistics.
All Cargo Logistics. Okay, fair call. Okay, so therefore we try and focus on that end of the business, right? So perfect. I heard you say that you are well prepared for taking advantage of the festive season. I presume GST 2.0 only adds to that fervor, because as much as offline shopping will be there, online shopping might also be there, and movement of goods and services will be active too. Is there some sense of what's the kind of growth that could come in?
We work very closely, Neeraj, with e-commerce and quick commerce companies. In fact, the top 5 in both segments work with us. And the growth we are experiencing and we are working towards in our partnership with them is about a 20 to 40% growth in terms of the fulfillment centers that we handle. And that is the reason why we have added the manpower and the extra square feet. We also integrated that with tech. So it's not just about people and infrastructure. A lot of tech and digital infrastructure needs to be built in to enable those movements. So whether it is handheld scanners, upgradation of IT systems, all that has happened. Our central monitoring cells have been enhanced. Route optimization tools we already have, those have been deployed. So it's very much an agile play, and we are seeing the trickle kind of coming in all the activity we're doing.
Okay. So you had mentioned, if I'm not wrong, in the August con call, as in the management, that There could be further margin improvement via white space reduction, operating leverage. Now you will probably see the fruits of the operating leverage for sure with higher volumes. So would the 50% revenue growth YOY that you clocked in quarter one, could it be emulated quarter three, quarter four, and could it be emulated with better margins?
On the white space piece, Neeraj, you asked me, we were in double-digit white space. That has come down to single-digit white space, so there is already a good improvement therein. I would not give any forward-looking statement, but let me reinforce your question with the answer that the growth will be in lines that we have given our guidance in both volumes in terms of revenue and, of course, the optimization flowing through downstream.
So, Ketan, then, if you could help me understand on the back of the festive season boost that you spoke about, the way you've scaled up, what is that kind of impact that you're seeing in terms of demand? By how much are you expecting it to grow only on the back of the festive season demand right now? And two, what's the kind of employee addition that you will see as well to meet this demand? Because I know festive hiring is also something that you guys look at then.
Correct. So, as I said earlier, the festive hiring has already started. And on the all cargo supply chain side, we will have about 5,000 plus people that we have hired to handle the demand. We work closely with the companies, as I said earlier, in e-commerce and quick commerce. And we are expecting to handle about 20 to 40% more shipments through our fulfillment centers.
Okay, and how much addition that it will give you in terms of a boost? If you have to talk about the current quarter, and I'm not asking you for a guidance perspective, but that addition that you're expecting.
The current quarter will be one of our largest quarters in all cargo supply chain, so in our history. So that's the guidance I can give you.
Okay, so and that's a strong one. And to meet this kind of demand, do you think you will need to expand anything?
In terms of infrastructure, we are adding about 500,000 square feet in about 8 to 10 cities. So that's the piece on the infrastructure, because we reduced our white space. That's what I was telling Neeraj. So we need to have this extra space to handle the volumes.
Okay. Well, Ketan, all the best for the festive season. May it be great for everybody. Just as we wrap up, I believe you guys had an analyst meet, right? I'm just trying to understand, while you spoke briefly about it, there has to be some definitive direction, indicative point, some number that you would have given to the analysts who would have come there. I mean, they are bloodhounds, I know them, right? As are we, of course. We want some data. Share something with us before you leave.
We are partners in any interaction we have, so happy to have that all the time. Tomorrow we have an investor day planned, so maybe after that I'll definitely circle back again if you need me to. And,
yeah, most certainly. Would be happy to do that, Ketan. Okay, great. All the best for the festive season. Thank you so much for joining in today.
Thank you, sir. My pleasure. Always.
Right. That's all cargo and constructive. All cargo logistics, of course, the subsidiary of all cargo logistics, which plays into all cargo logistics itself, and optimism. Let's see if that were to last. Vineet, these logistic players, and for the longest time we've been trying to think of whether this sector will come of age, will it make money? Sure, some sectors may have made money, but there has not been a standout mover, hasn't there been? I mean, is it difficult to make money in this business? What is it?
It's more of a commodity business, and pricing, there is no pricing power. And you have to have the best efficiency in terms of supply chain deliveries. So I think TCI scores very well out here. It's an age-old business, doesn't have to do anything fantastic. Growth is very measured, and a lot of free cash flow generation. So we like TCI Limited a lot. I think this counter will be one of the outliers in this industry.
Okay, but would that be a part of the ideal portfolio, Vineet, or would you believe that logistics maybe a bit later on, there are other bets to bet on right now. More
I think
vibrant
it's
bets
still
to
early.
bet on.
There is you're always competing for vibrancy. So I think TCI, the logistics is still to become. I needs to get more vibrant.
Okay, so that's with regards to the logistic space, but we're again delayed this time as well with regards to Heard on Street. My colleague Somit Sarkar joins in with all the chatter from the dealing room. Somit, what are you picking up today?
Well, a lot of stocks that are in focus, literally a lot of them. Firstly, it's Ambuja. Dealers are indicating that there are buy flows on FI desk in trade today. Then there are a couple of FMCG names, Britannia and Nestle, where there's a pair trade that dealers have indicated. They are asking their clients to buy Nestle and sell Britannia in trade. When it comes to deep industries, the dealers are indicating that there could be a possible QIP announcement very soon. In the next 1 month is what they're expecting, and the company is looking to raise close to around 350 odd crore rupees via 350 to 400 odd crore rupees via this QIP. When it comes to Devyani, there are buy flows on large HNI desks is what dealers are indicating, and they're expecting a big corporate development to be announced very soon on this counter. For ICICI Bank and Infosys, for both these counters, dealers have indicated that there are sell flows on FI desk in trade. For ICICI Lombard, dealers have indicated that smart investors have started to buy this counter at lower levels in trade, and they're saying that strong auto sales could aid growth for ICICI Lombard as well going forward, and that is the reason. For Patanjali, there are buy flows at lower levels, and dealers are expecting some kind of fundraise announcement that could come in anytime soon in Patanjali. And for Trent, the stock had been under pressure of late, but dealers are now indicating that the selling pressure is largely over for Trent. And when it comes to Religare, there are buy flows at lower levels. Dealers are expecting some kind of corporate development, some kind of positive corporate development to be announced very soon when it comes to Religare. And Electra Green was the stock that we did indicate on this segment on September 11th, where we said that the new CEO announcement will come in very soon, and we did clearly indicate that the ex-CEO of Switch Mobility was a likely contender, and he has been appointed as the CEO of Electra Green.
Thanks for that, Somit. That's 11 stocks I counted today. 11 stocks on which there is a cover, and then a confirmation on one more, which is Electra Green Tech. Quite something. Kush, I'm making your life difficult, isn't it? I mean, so many stocks out there. Pick one very quickly, Kush.
Thank God India has the lowest telecommunication charges. Otherwise, Somit's calls would have been a cost center themselves. So yeah, Electra Green, I would go with movement. 1660 is a support zone anyway. So yes, with the stop loss around the 1600 mark, go long for 1700, 1740 odd levels.
We need again a business or a stock that's been marred by some order cancellations, and then news that okay, maybe the orders could come in as well, a new person at the helm, all of that. How does Electra Green Tech fit into the investment argument, if it does, because the valuations are expensive?
Yeah, so since you pointed out the concerns, I think JBM Auto looks a little better. Okay. I'll go with JBM Auto, and they recently won orders in the Middle East, so they're opening up a new geography. That does sound good to me.
Okay, so not Electra Green Tech, but JBM Auto is what Vineet Bolinskar is saying. Okay, well, we take a break though on that note. Kush Bora, thank you so much for joining in today and giving us your thoughts. We'll get you the top BTST areas, some more ideas from Vineet Bolinskar. Thus far, we've asked him about what has stood out. Now we ask him what is it that he likes. So talk about all of that on the other side of the break. Stay tuned.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV. What makes life happen? Not what we hold on to, but what we share together. The spark that ignites, the rush, the now. The cheer that rises like a wave, a moment that takes your breath away, a rhythm that travels through 1,000 hearts as one. Unforgettable, unmissable, unique. It is energy set free. It is life lived. It does not simply stay with you, it becomes you. This is us. Bold, spirited, unafraid. A new India rising in harmony. A moment where joy is timeless. This is how good times arrive. Electric, unstoppable, unleashed. All for that moment in time. Welcome to our world of experiences. Welcome to NDTV Good Times.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी सब विदेश जाते हैं। The best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboard.
Welcome back. You're watching India Market Close on NDTV Profit. Let me get in Shivangi Sarda, Equity Derivative and Technical Analyst at Motilal Oswal. Shivangi, welcome to the show. My question coming to you is, when you look at markets, it seems that they're actually stuck in a really narrow range right now. It's just that markets are trying to spend some time. There is that time pass kind of factor that is happening. Call put writers probably are looking to eat some bit of premiums as well from here on. What, according to you, should an investor or a trader watch out for if you have to look at a trade on Nifty and Bank Nifty?
Very good afternoon, Hiral and Neeraj. Thank you for having me. So we've seen that the indices have, witnessed some sort of profit taking after rallying in the last 10 trading sessions. Now, of course, the 4 days have been a little bit of in weakness and profit taking. Now, it has somehow managed to hold 25,000 levels, which is, key important psychological level at these zones. So as long as it manages to hold above 25,000, we could see a bounce back move from here towards 25,350. But if it fails to hold these levels, then we could see a downside move towards 24,850 levels. So this is the take on index. Of course, there is some bit of pressure. The India VIX has also acted up. And the put call ratio has somehow, sunk below 1 level. So clearly, call writers have added in their position for the monthly expiry. But of course, we are heading into the monthly expiry. So a lot of volatility and momentum expected here out of the index. Now, talking about the Bank Nifty here, there is slight bit of outperformance seen as compared to the broader market, because we've seen this index not sunk as, the broader market. So overall, the PSU space stocks are actually, driving this entire space, and we are looking at some of the important names. But as long as this index manages to hold above 55,000 levels, we could expect positive momentum to continue over here. Else, there would be some weakness towards 54,650 marks.
Okay. So there are some ifs and some buts. In light of this, Shivangi, what are your ideas for the afternoon?
So for the afternoon, first pick on my radar would be Electra. Electra has seen a good amount of action at the higher levels. It has consolidated from the last 6 to 7 trading sessions, and we've seen on the weekly basis it is continuously making higher top, higher bottom. So of course, this one's looking quite positive. From the last 3 weeks, we've seen volumes have been above average. And of course, with the GST reforms, entire auto space stocks have had a tailwind. And this one is kind of related to it. So expecting good momentum to continue here till the targets of 1700 levels and a support of 1612 zones.
Well, Olectra Green Tech is featuring in the list of the trading ideas. Vinit Bolinchkar, of course, likes JBM Auto more fundamentally as opposed to Olectra Green Tech, but certainly both Kush Bora and Shivangi Sharda liking Olectra. And as Somit said, that there is some news flow out there which has gotten confirmed, right? So I think just keep an eye out for that. Today, a lot of stocks are actually cooling off from the highs of the day. So Prestige Estates is down, but on very high volumes. That is the worry. 52-week low for Quest Corp. So keep that in mind. Well, and a lot of other stocks are actually coming off. Magnesita, RHI Magnesita, and a few others too are correcting in trade. So some stocks cooling off. Lumax is the one which has hit an all-time high of 4767. So that is, of course, standing out. So keep some of these in mind. Vineet, this morning we read a note from Goldman which has observed that cement pricing has actually been stable in this season, even if volumes have been a bit off, and therefore Q2 earnings might prove resilient. You track the sector from I mean, as an overview better than most people that I know. What is your view on cement? Can it be an outlier again in Q2 after proving to be the best performing sector in Q1?
I think the momentum will continue, sustain. And, from Q3 onwards, we'll see a lot of volume growth also start kicking in. So we are quite constructive on this sector. Ambuja is one of our top picks along with JPL Lakshmi Cements.
Let's cut across to IMFA and Railways Minister Ashwini Vaishnav briefing media about the cabinet decisions.
कि शिपिंग और मैरीटाइम सेक्टर किसी भी देश के लिए और विशेषकर भारत के लिए बहुत ही एक स्ट्रैटेजिक सेक्टर है. शिपिंग एंड मैरीटाइम सेक्टर भारत के लिए एक स्ट्रैटेजिक सेक्टर है. स्ट्रैटेजिक सेक्टर इस तरह से भी है कि हमारी एक लंबी हेरिटेज थी. टिल 18th सेंचुरी भारत के शिप दुनिया में सबसे एडवांस्ड शिप्स माने जाते थे और दुनिया भर से लोग भारत में शिप खरीदने आते थे. भारत के डिजाइन को यूरोप लेके गए थे. एक ओवरऑल जो हमारी मैरीटाइम हेरिटेज है, उस हेरिटेज को रिवाइव करना जरूरी है देश की इकोनॉमी के लिए भी और देश की जो इनहेरेंट स्ट्रेंथ है उस पॉइंट ऑफ व्यू से भी. हमारे भारत के पोर्ट्स वेस्टर्न कोस्ट पे, ईस्टर्न कोस्ट पे सदियों से कई दूर दराज के क्षेत्रों से ट्रेड होता आया है भारत के पोर्ट से और कई सदियों तक चलता रहा. 18th सेंचुरी के बाद में भारत की सिचुएशन बदली, कुछ खराब हुई कुछ कारणों से, हम सब जानते हैं वो कारण. लेकिन अब 2047 तक भारत को फिर से विकसित राष्ट्र बनाने का जो मोदी जी ने संकल्प लिया है, देश के सामने संकल्प रखा है, उसका बहुत बड़ा हिस्सा है शिप बिल्डिंग और मैरीटाइम सेक्टर. तो आज करीब 70,000 करोड़ रुपीस का पैकेज अप्रूव हुआ है. टू बी प्रिसाइज 69,725 करोड़ रुपीस. 69,725 करोड़ रुपीस. और ये 10 years का प्रोग्राम है बड़ा. इट्स अ 10-year प्रोग्राम. इस प्रोग्राम के इंपॉर्टेंस हम सब जानते हैं. शिप बिल्डिंग इज द मदर ऑफ हैवी इंजीनियरिंग. शिप बिल्डिंग इज द मदर ऑफ हैवी इंजीनियरिंग. बहुत इंपॉर्टेंट है. उसके बहुत सारे शिप बिल्डिंग इंडस्ट्री चालू होती है तो उसके बहुत सारे मल्टीप्लायर इंपैक्ट होते हैं. शिप बिल्डिंग चालू हुई, इंजन मेकिंग चालू होता है. शिप बिल्डिंग चालू होती है, पावर इलेक्ट्रॉनिक्स को उसका बेनिफिट मिलता है. शिप बिल्डिंग चालू होती है, स्किलिंग के लिए बहुत काम आते हैं. शिप बिल्डिंग से कई तरह के मटेरियल्स का प्रोक्योरमेंट, कई तरह के मटेरियल्स के डेवलपमेंट चालू होते हैं. तो जो इकोनॉमिक्स पढ़ते हैं उन लोगों के एस्टिमेट है एम्प्लॉयमेंट मल्टीप्लायर शिप बिल्डिंग का 6.4 है, यानी अगर एक व्यक्ति शिप बिल्डिंग में काम करता है तो 5 more persons get employment because of that one person who is working in the shipbuilding industry. That is the employment multiplier factor. Investment multiplier is almost 2, which means if we invest 1 crore rupees in shipbuilding, then the economy gets about 2 crore rupees benefit. इसीलिए बजट में अनाउंस हुआ था, माननीय वित्त मंत्री जी ने अनाउंस किया था कि शिप बिल्डिंग सेक्टर में बड़े रिफॉर्म्स लाए जाएंगे. तो आज ये बड़े रिफॉर्म्स कैबिनेट में अप्रूव हुए. ओवरऑल स्ट्रेटजी बेसिकली 4 पिलर्स पे है. 4 पिलर्स में पिलर नंबर 1 है शिप बिल्डिंग फाइनेंशियल असिस्टेंस स्कीम. पिलर नंबर 2 है मैरीटाइम डेवलपमेंट फंड. पिलर नंबर 3 है शिप बिल्डिंग डेवलपमेंट स्कीम. पिलर नंबर 4 है लीगल पॉलिसी एंड प्रोसेस रिफॉर्म्स. पिलर 1 shipbuilding financial assistance scheme is 24,736 crore rupees outlay. Pillar 2 maritime development fund is a corpus of about 25,000 crore rupees. Shipbuilding development scheme, the pillar 3 is about 20,000 crore rupees, to be precise 19,989 crore rupees. And pillar 4 is legal policy and process reforms. I'll go through each of the pillars one by one. सभी पिलर्स का एक एक करके डिटेल में वर्णन करूंगा. पहला पिलर शिप बिल्डिंग फाइनेंशियल असिस्टेंस स्कीम. इसका कंपोनेंट 1 है फाइनेंशियल असिस्टेंस. हम सब जानते हैं कि शिप बिल्डिंग बहुत डीप कैपिटल चाहिए होता है, बहुत कॉम्प्लेक्स इंडस्ट्री है. दुनिया के ज्यादातर देशों में ये इंडस्ट्री ओवर अ पीरियड ऑफ टाइम फिनिश हो गई और जिन देशों ने इंडस्ट्री को सपोर्ट किया वही देश इस इंडस्ट्री को सरवाइव करा पाए.
Okay, so that's Ashwini Vaishnav talking at the cabinet briefing, giving out the details in terms of the approvals that have come in. 69,000 worth for shipbuilding sector. Let's see a SCI, which is at the day's highest levels. Garden Reach as well as another one. Cochin Shipyard is what you should be looking at as well. So 3 stocks that are trading in the positive. In terms of the railway project worth 2,200 odd crores that is approved, and the national highway project worth 3,800 odd crores that has been approved as well. So certain infra companies that will be focused. Railway though is trading near the day's lowest levels when you talk about RVNL, Titagar, Texmaco. These are few of the names you should be looking at. In fact, let me go to Shivangi. Shivangi, there is pressure with regards to railway names right now. And if you talk about the shipbuilding companies, there is the positivity from a SCI to a Garden Reach to a Cochin Shipyard. Would you be a buyer of either of these from the shipping side or from the railway pack?
So, talking about the entire shipping or railway pack, I think defense space is something which would, actually stand out in the today's momentum. And, in that flavor, I'm seeing Cochin Shipyard, which is from the shipping space. It has bounced back from its lower levels after 2 days of softness. And this stock is actually making a rounding bottom formation on the larger time frame. And we've seen good amount of support from the lower levels, and it is acting as a cushion, although momentum is slightly less over here. So I would recommend that, this stock could be a buy above 1900 levels, but once it crosses 1900 and holds above the same, the risk reward is quite favorable for another 2000 levels target over here. But of course, stop loss has to be maintained around about at 1860 zones.
That's with regards to where a technical view on that front goes. A few of small cap buzzers that you should be watching out for. Bajaj Electricals. That stock is buzzing in trade on the back of the acquisition of Murphy Richards brand for around 146 odd crores. It's now cooled off. 2.5% uptick is what you were seeing. In fact, the stock was up almost 10 to 15% in trade in intraday session. Wheels India, that stock has also surged. In fact, it's a multi-bagger. It's already doubled. And what they've said is that their FY26 capex focuses on windmill component manufacturing, and they're aiming for a revenue of around 5,000 odd crores in FY26. So good moves coming in on a Wheels India as well. And if you have to talk about the other one, which is Tata Investment, that stock, they've approved a stock split in the ratio of 1:10. and the rationale is to make the share price more affordable. That's usually the case when they do that. The stock seeing gains of almost 9%. Vineet, any view on any of these three names, Bajaj Electricals, Wheels India, as well as a Tata Investment?
I think Bajaj Electricals looks very good. Their acquisition is value accretive, and we believe that with the GST kicking in, I think this stock can do very well. We are very, very bullish on the consumer space.
Okay, and is it for Bajaj Electricals alone, or because I heard you say that you're bullish on the consumer space, there are other names within this category too?
Yeah, so across, so it's more diversified. If you were to look at it, more bullish on the distributors. So EMIL, Aditya Vision, they look very, very strong. They're going to be a very major beneficiaries. With the OEM players, the problem is that there is too much of clutter in terms of competition, and your margins tend to be a little bit under pressure always. Whereas distributors are concerned, I think AVL and EMIL are best placed to benefit from the consumer push.
We spoke to Aditya Vision yesterday. They are guiding to 20 to 25% growth. Can't talk more beyond it. So is your thesis for that 25% growth, or do you believe that it will outperform and it is under-promising?
I don't think they're under-promising. I think it's a very well-matured business that they have. And, Bihar is very fast, catching up with the rest of the country in terms of penetration of electrical and appliances. And they're expanding their markets into neighboring geographies also. So doing 22 to 25% growth is quite achievable. And they have been very, they have generally lived up to their guidance. So I think AVL is not underplaying their hand. I think they're well on top of things.
Okay, so that's with regards to where few of your small cap names are concerned. The other pack which is buzzing in trade is the fertilizer and chemical space. Let's pull up a Deepak fertilizer on the screens. You have a Paradip Phosphates as well, which is doing pretty well. Zuari Agro is another one which is seeing some smart moves in trade today. Shivangi, are you seeing any momentum play in any of these names where there is further strength?
Now, looking at this entire structure, of course, the market has not been, supporting the stocks right now. And of course, we have seen good amount of momentum in these, but I would, recommend a wait and watch here till the time the market regains some stability and there is some sort of, tailwind, because these have a direct correlation with the market movements as well.
Okay, so you will wait for some bit of stability to come in on this front. Vineet, coming to you very quickly with regards to where H-1B visa goes. Now the Trump administration has actually floated more challenges and changes to the rules where they are saying it will be more linked with regards to higher wages, further skilled ones, it will become easier. Are you seeing further challenges emerge for IT as a sector, and what would you advise investors to do then?
I've been perennially negative on this sector since 23, and we have been, although the stocks have not done any damage so far, they have underperformed the market significantly, and I see the erosion now take place coming from this quarter, because the Americans are doubling down on creating local jobs. They're trying to twist India into some kind of a corner. IT is a very, very big industry, $300 billion. And, we are going to face challenges out here. So challenges from dollar depreciation, top line growth, margin pressures, everything is coming into play. And, the concentration of business, especially to the American continent, is not very, very enthusing. We think that the dollar decline is all but a matter of time, and that is really going to hit them on all the fronts. So operating deleverage is the buzzword here, and we are quite pessimistic on this.
Okay, well, let's talk about closing strategies before we talk about special segment profit intelligence, because it is 3:20. So Shivangi Sarda, You already gave us a couple of ideas, but you know us, we are hungry for more, right? Give us a BTST or an STBT.
So, of course, the markets have been, a little bit of in weakness zone, or rather at a make or break zone. But of course, there is one stock which is doing quite well, which is Sirma. I'm looking at this with a price volume consolidation breakout at these levels, and the stock has actually moved quite well today. And the follow up is quite strong. It is closing near its day's higher band and looking quite positive for the next up move. So momentum is likely to continue here with the next target of 900 levels and a support of 845 zone.
Okay.
845 on a Sirma. Interesting. In fact, let's look at the special segment, that's profit intelligence. One stock which is interesting, that's Copran. Now, the stock has actually corrected 50% in the last 1 year, but after that 50% correction, last 2 trading sessions, it's seen a good recovery that's coming in. Yesterday, I think it was up around 2.5%. Today as well, the stock is up 2.5%. What is in store? Why the fall? And what one should be looking at from here on? Vansh joins us with all the details. Vansh, over to you.
Well, yes, as you rightly mentioned, the stock has already corrected about 50% in the last 1 year. Now, let's quickly go through the reasons behind this fall. So firstly was the pricing pressure from the Chinese competitors that has hit the API revenues for the company. Now this revenue hit was especially for the products like meropenem and azithromycin as well. Now if I talk about the API segment, now it accounts for about 56% of the company's FY25 revenue. And also if we talk about the profit, now the profits have also witnessed a serious decline. We have seen a 23% decline for FY25 in terms of profits and a 33% decline in terms of on a year-on-year basis as well. Now let's look at the interesting part. Let's also look at the forward outlook for the company. Now the management says that the worst in the APIs is behind. They are also expecting the new drug launches to have stable margins for the company. And they are also targeting a big pivot to the CMO and the CDMO segment. In fact, they are targeting a 50% of the business in the 2 years from coming in from this particular segment as well. Let's also talk about the FY26 and FY27 revenue target. They're targeting a growth of about 12 to 14% in terms of revenue for FY26 and FY27. If I talk about the 4-year targets for the company, now they are targeting a 1200 odd crores of revenue down the line versus 600 odd crores in FY25. So clearly what we can expect is the revenue to double in the coming 4 years. Also they expect to clock their EBITDA margins of about 17 to 20% versus the EBITDA margins of 12% in FY25 as well. Lastly, the positive pointer lies with the amalgamation that the company has done with the Copran Labs. Now it is engaged in diagnostic services. Now this will be again be an EPS accretive amalgamation for the company as well. Now if I lastly talk about the investor interest in the company, now ace investor Madhu Kela has hiked their stake in the company to 1.46% in June 2025 versus 1.04% in December 2024. So clearly the worst looks behind for this particular counter as well.
Okay, thank you so much for that, Vansh. In fact, a quick question with Vineet, any coverage with regards to Copran? I know it's a small company, but any views?
Really, we would want them to, walk the talk on their aspirations before initiating any kind of note on the company. They're making all the right noises, talking of transition of business from commodity to more value add. And if they're able to scale up that business, then definitely the stock can do well. But right now we are not covering it, and so we don't have any kind of price target on this.
Which is fair. I mean, yes, you don't have coverage, you can't talk about it. Shivangi, any thoughts here?
So looking at this stock, of course, purely on the basis of technicals, we've seen that the stock has witnessed good amount of volumes in the previous 2 trading sessions, but overall on a week-on-week basis, it has consolidated from quite a long time, and we've seen attempts of recovery have been actually failing to hold at the higher levels. So, a little wait and watch on this one for me.
Vineet, like I said, we've asked you a lot of stocks that we think are good. One mid-cap name. Chalo, let's try and talk about that. In something that you guys may have initiated in the last 15 days, where you personally have a lot of conviction as well.
Well, I'll talk to you about 2 stocks. I think one is Manorama Industries. Manorama is a player in the cocoa butter space. Cocoa butter trades at a significant discount to the traditional commodity. and there is an increasing usage for that. It is a monopoly player in this space, at least from India. And you should just check the way they've doubled their capacities. I think they will keep enhancing capacities, work at high rates, and they've got significant moats in terms of raw material supply chain, which other players cannot match. Secondly, they're a 100% sustainable company, and their applications go beyond just chocolates to even beautification and other processes. Very, very strong company. I think, to my mind, if I were to invest in one single business in the consumer space, I think it would be Manorama Industries. The other company that I want to talk to you about is Hindustan Construction Company. Over the last couple of years, their execution rates have kind of come off. But right now, what we are going to see is they're sitting at a point in time when their order book wins are going to go up very significantly, and that should lead to higher revenue booking. We think that the stock can double in the next 3 years. Margins are double digit, and they have significant upside coming from legacy issues where they won arbitration awards, and there's a lot of restructuring happening in the businesses that they've sold overseas. So there's a lot of cash flow expected to come from there. So we are very, very constructive on this company, and we believe that its capabilities are comparable to even those of L&T. So we've seen the worst of the stock take place, and now we expect that this company will emerge as a good investment opportunity in the infrastructure space.
Right, Vineet, I know you have an interesting target price of 64 on a HCC, but Shivangi, a quick one. Do you see a 64 as a target any time in the future?
So of course, talking about this stock, it has gained a lot of momentum. But overall, we've seen that technically this stock has actually witnessed, some sort of giving up in the last few weeks. And we've seen that the stock has, of course, made an attempt to recover from the lower levels, but it is still having a lot of resistance at these, 30 levels. So that would be the next resistance that could be watched out for this stock.
Absolutely. In fact, yesterday Amit also mentioned 30 is that resistance point for HCC from a technical perspective. But thank you, Vineet. Thank you, Shivangi, so much for joining us on the show and sharing your views. And on to an NDTV Profit exclusive yet again. My colleague Agnidev Bhattacharya caught up with the CFO of Metro Brands, that's Kaushal Parekh, who believes that GST cuts will let customers spend more, increasing overall consumption. Let's listen in.
Close to about 44% of our sales are below 3,000, and close to about 35 to 40% of our sales would be below 2,500. Around 40%, give or take few percentage points, would get impacted on account of the changes in GST is what we have seen. As I touched upon this point slightly earlier, I think because of all the changes that has happened, GST rate reduction, tax rate reduction in RBI interest rates, I think overall customer sentiments would be much better. They would have more money at their disposal to spend, and I'm sure that money would chase consumption, and some portion of it would also come to footwear. So we are expecting overall improvement in customer sentiments leading to higher sales, and that sort of bodes well for us.
All right, let's start wrapping up the markets for you. A minute and a half left, and we'll make this quick. So let's first get the Nifty 50 and the mid caps and the small caps after that, because we're seeing some pain. We are ending virtually at the low point or around the low point of the day, but not quite defending 25,100. That's painful. Mid caps and small caps on your screen next. 1% lower in lowest point, as I said. Small cap index as well. Yes, indeed, at the low point of the day, 0.6%. So not a happy hunting ground today. Let's get the heat map. I believe there could be a fair degree of red and little green. More red than green for sure. Autos pull back today. There is BEL, Adani Enterprises, Geofin, Wipro, Indusin. It's across the sectors that we're seeing a pullback. I don't think a major index is dragging because both IT and banking are down. What's doing well? Power Grid, NTPC, HUL, JSW, a bit of a defensive bent here. And then let's get the BSE 500 winners and losers list. I think there too, there should be a fair degree of pain here. Look at the losers, right? So Adani Power and Total Gas, 11% and 8% respectively, while Rampur 6%, Godrej Properties 4%, Samvardhana 3%, Ipca Labs, again, across the sector, you're not having a particular theme stand out today in terms of the losers. On the gaining side, Minda Corp, those plans and the brokerage notes that came out, I think Nuvama, MK, a big upside there, 8% higher, IFB 4%. A lot of fertilizer names gained some traction, CUB doing okay, Deepak Nitrite 2.8. So well, that's the long and short of how the markets did today. Keep in mind, while the advanced decline has stayed adverse, the India VIX has actually not really shot up in any fashion whatsoever. It's still in the red today. So volatility is kind of doing okay today. But on the whole, a quiet day throughout, and then